$60 silver, or maybe even higher, $3,000 gold, or maybe even a correction here, and major market crash potential. That's kind of what I'm getting from reading your newsletters here, Michael. And I also want to talk to you about your political views later on, which is going to get a little controversial, I know, but we're going to still going to do it. Right after that, I also have two gold and copper explorer codes that I'll be talking with that being Ridgeline Minerals, who just did a pretty big deal for JV with South 32, and also made an interesting observation on some of their recent geophysics and rock samples. So loads to talk about there with Chad. And then Aurania. Aurania is exploring for gold in Ecuador and France, of all places. They're also a Rick Rule company. So I met them at Rick Rule's conference earlier this year. So this is going to get a heated barbecue later on for sure. But Michael, anyways, I'm rushing to talk to you, and I want to get your thoughts on gold, because as we speak, we're hitting new all-time highs. We're very close to 2,600 and have really been going up in as much of a straight line as realistically possible over the last 52 weeks. So what are your charts telling you about this move? Is it close to over, or has it just started? Talk to me.
Well, I think we're entering an acceleration phase. First off, the bull market began by our metrics, momentum structural analysis of the gold market. Coming up off the 2015 lows, price then was $1,050. When we got up to about 1140 in February 2016, annual momentum of gold, not the price chart. The price chart was still staircasing down, but momentum had built a base, a floor, where if you saw the momentum chart, you'd say, wow, that's a base. You didn't see it on the price chart. But anyway, when we went through 1140, the bull market began. Okay. Now it's been 9 bloody years of arm wrestling, where you surge a couple $100 and then you go into a range and then you bore people to death, you turn them negative, et cetera, et cetera. But meanwhile, it just keeps going up, So we've doubled. It took us 9 years to double the 2000 plus. And then we went into this range bound situation between mid 2020 and about March of 2023, where gold went into this sideways type action with sort of a ceiling at 2000 or so. And there was a plunge low that took you down to $1,613. So we had a 20% drop intra trend there, which spooked everybody. But that was a range-bound congestion zone that was a rest stop, 3-year rest stop during the bull trend. And by our metrics, we broke out, we renewed the bull trend. Let me put it that way. We didn't start fresh. We renewed the bull trend in late March of 2023. Gold was pushing up through 2000 again. So something had done before, but this time it was different. Momentum said, no, this time it's different. Silver then was just above 25. And it did the same type of thing on our annual momentum. And when we looked at GDX, the gold miners, they had the same pattern, even though silver and the gold miners during that several year process had been in a staircase decline, while gold had been more or less sideways. But they had the same momentum signal that said, okay, we're waking up. Okay, well, what we did, silver went from 25 to 32 plus by May. Okay, gold went to 25.40 by April. Silver went another month beyond gold in its rise. And GDX, now today is making a new high. We're well above 40. And so they've definitely stated back in late March that we're awake, we're going for more. Okay. We think it's going to be accelerated, meaning that what we've seen over the last 9 years in gold has been an arm wrestling, laborious process. It won't be so laborious anymore. This time it's going to be more vertical. And gold's the mama market. Okay, what it does, it controls the other two, even though people get, scared of silver, scared of the miners. Whenever they flinch more than gold. Gold sneezes, they get a cold. Okay. But then when they get strong, they get stronger than gold. In fact, that's occurred this year so far. And like take silver, for example, last week, from the low of the week to the high of the week, silver went up more than 10%. Gold went up a little more than 4% from low to the week to the high of the week. So that's the kind of dynamics you're going to get out of silver and the miners relative to gold going forward, where they're going to be out in front again. We call silver a dog on a leash, a wild little puppy. It runs behind you, runs ahead of you. Okay, it's going to run ahead now. So our focus is on gold as the mama but silver is highly likely to outpace gold on a percentage basis. I'll give you some numbers. There's some big brokerage firms that are talking $3,000 gold. And frankly, we can come up with that as a possible pause level where gold might, take a breather. Okay. Not the end of the bull market, but just, in this surge that we, started just above 2,000, we could go to 3,000, let's say, in a month or so. Wouldn't surprise us. Well, what happens if that happens? What might silver do? Well, if you go back and look at 50 years of the relationship between silver and gold on a spread chart, meaning silver expressed as a percent of the price of gold, you'll see that during that 50-year period, probably a third of the years involved in there, you got up to 2%. So it wasn't unusual for silver to be at 2% of the price of gold. And in quite a few years, even at 2.5% and even 3% of the price of gold. But let's forget that. Let's just say 2%. Well, I mean, if gold goes to $3,000 and let's say pauses there, and silver goes to a, sort of a normal 2% of the price of gold, silver could be $60. Okay. Now, if you look at historically the old prices of silver, the peaks, $50 and $50, 1980 and 2011. So, and it's interesting too, when gold is above those highs, back in 2011, it was 1,920. Okay. 2020, it was 2070, well above those highs, old highs. And back in 1980, gold was 850, so it's well above all its prior highs. But even if you look at copper, for goodness sake, base metal, it made a high in 2011 at about $4.50. And it made a high in 2020 during its surge, the commodity surge that occurred in like 2022. It got up to like 490 or something. Well, it exceeded that high recently. Got up to like 510. It's now about 420 something, but it pulled back. But still, it managed to take out its old historic highs. How come silver hasn't done it yet? Well, maybe it will. Okay. So silver's now 31 plus. In May, and again, I think it was June or July, we traded up over 32 and then dropped, over 32 and then dropped hard, almost down to 26 a month ago. Okay. So if you're looking at a point and figure chart, the X and O guys, X's, O's, okay, you have a dual top at 32, $1 by 3-block reversal. You go back and touch 32 again. We've been up to 31.50 today. You touch 32 again, you're at what's called a triple top, and you're not going to stop. That's going to be a triple top breakout. When you touch 33, even the price guys are going to say, wow, we thought it was topping. It ain't topping, And you're going to have, I think, a flood of money, late chasing money, move into silver. And I think at that point you could gush well past 50 and take out the old obvious dual highs at 50 that any idiot could see on a price chart. And maybe go to 2% of the price of gold. If gold goes to 3,000, it wouldn't shock me. Silver's 55 or $60. And maybe it pauses there. So I'm not saying that's the ultimate peak. The gold, I think silver got a couple hundred, to tell you the truth, over the next year or so. But I'm concerned right now about this surge, both from a trading point of view and even investors. I think we're about to hit a major surge here where the dynamics change so rapidly that you're stunned. And I think silver could easily blow through the $50 dual highs and, of course, suck a lot of new money in at that point. And then maybe after that, then maybe have a pause. But I think that's on the table, and I think it's distinctly possible, and it could happen very quickly.
I do want to talk about silver a little bit later on. What I'm thinking about, though, is that you said that we could take a breather in gold once we reach $3,000, but you don't think we're due for any correction before that?
No. No, before that, I don't. No, I think you just had it, in fact. If you look at the charts, what happened in March, April, in 6-week period, from like mid to late March through mid-April, gold went up $450. Boom. And then April, May, June, July, gold went sideways. Couldn't get to 2,500. Okay. And then finally it got over 2,500 recently. Now it traded to 2,600 today on the October contract, front month contract actually traded 2,600. And so there was a pause there already. And during that time period, what did silver do? Heck, it corrected from a high at 32.70, I think, intra-month, intraday high, down to just about 26. So it had a heck of a correction. So there's no need for a correction. We've had the correction. And I think the action that we've seen over the last several weeks indicates, hey, the correction's over, guys. You had your chance. You wanted to break silver, you got it back to 26 and change, and in a heartbeat, you're 31. Okay. So, what do you want? That was it. I think we're now engaged for the more dynamic part of this next upside. And I think silver could easily exceed 50.
What is making you so much bullish on gold? I mean, is it more on the back of a weaker dollar, or is it purely gold's own strength and fundamentals?
It's just the ongoing degradation in the money unit. I mean, it's constant. The money unit, I mean, the value, the real value of the dollar, the real value of the euro or the yen, or you name any fiat currency, it's constant degradation. I mean, if you double the money supply in the US dollar, and that's basically what's happened since 1960, almost every decade, the supply of money almost doubles. And over the last 10 years, it's more than double. Okay. When you do that, the real buying power of that piece of paper depreciates drastically. Okay. So, when I was a kid, a loaf of bread was 20 cents. Okay. Well, what do we have? A wheat drought? No, you got to degrade, your money and it's a piece of crap. It constantly degrades. And therefore it's reflected in rising prices of real money, gold, ongoing. Now there's surges and there's pullbacks during that process, and they're not all directly correlated to the expansion in the money supply. But ongoing, it's an expression of the ongoing degradation of the money unit. Now, right now, on a relative basis to other currencies, which doesn't mean anything, it's not special. The dollar is now weaker than the euro. Not that the euro is some great piece of paper, but the dollar is breaking down versus the euro, which is 57% of the dollar index. Okay. So the dollar index, after the drop, we had the dollar index, which made a peak in 2022 at 115 price level. It's dollar index now. It dropped down toward 100 rapidly by early 2023. And since early 2023, the dollar index went into a nothing range between basically 101 and 106. So like a 6% range where it just went up, down, teased everybody both ways, didn't go anywhere. It was a non-event. It's what we call the quiet one. Okay, nobody's looking at it. Okay, well, when it came down through 104.40 back in September, we put out a sell signal saying, okay, the quiet one's waking up, or rather waking down, okay? And now it's trading just above 100. Now you break under 100 and you're going to alert the price guys, because when you look at 100 on the dollar index, you can see sort of a pivotal level there on a price chart. Momentum already says you're broken. Okay, so you're going to break that price level probably. And when you do, the price guys are going to wake up and say, oh my gosh, the dollar's weak. And it's a major asset category. I mean, it impacts other things. And over the last year and a half, it hasn't, because it's been asleep. It's been non-dynamic. And if suddenly it becomes dynamic to the downside, then that will further inject dynamics one way or the other into other asset categories, such as gold. It'll no doubt help gold. Not that the dollar is essential. The dollar index trends and their correlation to gold are not that good. They're really not. I think, though, this current weakness is likely to help inject some further wind in the back of gold. But anyway, it's a new factor in play that very few people are talking about. But suddenly Forex could become, a headline event again.
Do you track gold in other currencies as well? Because what we've seen is there has been a pause in gold's momentum in other currencies. I mean, the charts don't
Yeah,
look at all the
they're
same.
still positive. Yeah, I know what you mean. We look at it occasionally against the euro, for example. And while it's been going up against the euro more than the dollar now recently, because the euro is firmed, gold's a little less dynamic against the euro, but it's an ongoing trend against all those currencies, the yen, the euro, and so forth. So yeah, there's pauses, but they're not technically meaningful. They're just, it's relative to the underlying money unit, not so much to gold. And but gold is right now, I've got some, people I know that I trust and think highly of in terms of their fundamental views and so forth that are talking 20,000 plus gold. And I have no argument with that, period, whatsoever. I mean, the certain events are about to unfold that I think will create the sort of monetary dynamics that depreciate the money units even more at a more rapid pace in terms of the real buying power and appreciate gold. And why would that happen? Because the central banks, if certain key assets start to break down, such as their stock markets, in a way that impacts the data points that they like to look at, then they have to panic because it's their mandate. The unemployment situation is suddenly the inflation issue is okay for them. Now suddenly we're looking at unemployment. Well, you break the stock market down and you're going to get the data points to follow it. They usually don't lead it. And so the data points the Fed's been looking at haven't really been, negative. And Powell said today the economy's strong, so forth. So, well, you take that stock market down, and those data points are going to go south quickly. And then suddenly the Feds are going to do what they always do. And so is the ECB. And they're going to panic and they're going to print and they're going to monetize debt. And, what's that going to do? It's going to goose gold.
I want to talk about that and fiscal dominance in an event of a potential market crash. How do you know this is not a false breakout, though, in gold and specifically in the US dollar? Like we've seen that a couple of times before.
Well, our work says it's not false.
Hmm.
And I trust our work. And our work is somewhat different than most technicians who are looking at price charts. We measure price and its relationship to the dynamics that it sets over time, such as its annual momentum trends, its quarterly momentum trends, its monthly momentum trends. So we look at from short term to intermediate to long term, and they're all saying the same thing. And it's not just gold by itself. Silver's echoing it. Gold miners are echoing it. Other asset categories that we expected to echo it are starting to echo it. For example, over the last several years, well, in 2022, for example, if you own stocks, the 60-40 rule portfolio, 60% stocks, 40% bonds is supposed to be a balanced portfolio. Well, you were murdered in 2022. Bonds went down even more than stocks. See, the whole concept didn't work. But the quarterly momentum situation in T-bonds developed over the last year or so, while gold was in a congestion zone, prepping for an upside move. T-bonds were building a basing action on quarterly momentum. You couldn't see it on the price chart. The price chart continued to show lower lows. So it was like, higher rates. Oh my God, they're not going to quit, Well, but quarterly momentum says, no, this is a basing pattern. And we've argued that T-bonds would likely follow gold up, meaning yields would drop, bonds would rally, not other debt instruments, not high yield corporate debt, not muni bonds, but treasury bonds. And we could see it in the technicals, the quarterly momentum, and they echoed gold. So it's not just looking at gold, but T-bonds over the last month or two have exploded in price. TLT, for example, is a popular ETF of long-term US government bonds. And at 93.5, we said, that's it, it's over, it's going up. Okay, it's now trading up the 101 area. Okay, now, and it's just begun. So what we see there is an asset class shift by what? Portfolio managers who are looking for some other place to be other than what they now perceive to be a high risk, less likely good return stock market. And when they see that, it didn't work in 2022, but it's working now. And I think a lot of asset managers are making that shift into that, 40% thing. And they're buying T-bonds. They're not buying munis. They're not buying high yield corporate debt. They're buying safety. Why? They're concerned. For their own particular fundamental or technical reasons, they see what we see in the stock market. Oh, I don't know if they see it as badly as we do, but they see risk. And therefore they're moving assets. And I think a lot of those assets have also moved into gold miners. We know, there's some headline events since back in February, Druckenmiller bought Newmont Corp, the biggest gold miner in the world. Probably people laughed at him back then. Newmont then was at $31. Where is it now? 52, 53, 54. In a matter of 6 months, 7 months, exploded. Okay. There's been an asset class movement by fund managers who are not necessarily gold bugs into things other than the stock market and out of other things. Now, for instance, the dollar index, we think, is now going to be coincident with the direction of the stock market, downside. The only asset category that's yet to break our quarterly momentum and indicate the new trend direction. The gold did to the upside in March. T-bonds did in July, upside. Dollar did in September, downside. Using the same metric, quarterly momentum, long-term trend metric. They said trend is the other way now, okay? But the S&P hasn't broken its structure yet, nor the NASDAQ 100. Let me tell you this, about 4% below where you're trading right now on the NASDAQ 100, which is the leader index. There's no question, since 2009, it better than doubled. S&P went up 7-8-fold, it went up 16-fold, okay, in price. It's the leader, okay? Right now, it's not as strong as the S&P, which is interesting. The S&P just made new highs today. NASDAQ 100 isn't back at its highs, But NASDAQ 100, about 4% below where you're trading right now. If you trade there next quarter, meaning in 2 weeks, okay? There's the dynamics there that we see that could create a sudden, dramatic downside in the stock market. The kind that would shock people, the kind you might label a crash. Now, this would fulfill those 4 categories that we're watching. We expected the dollar to roll over, it's done it. Expected T-bonds to break out upside, they've done it. We expected gold, silver to do so. They led the way in terms of the clock. And I think the stock market is the next one, but it's going to be downside. And I think it could be fairly headline generating.
That's something I also want to talk about, specifically the gold equities that you just mentioned. And it's interesting you're talking about the investment demand on gold, which is not all the demand. I mean, there's a lot of consumption of gold coming from the east, if you will. And I know you recently wrote about India with the title of, quote, "Beware of Crash Potential," unquote.
Yeah.
Where you talked about the Sensex index and how it's getting overextended, basically. And China isn't faring off too well either. So do you think that turmoil in those markets might result in lower demand for gold from the consumer angle?
No, I don't. I suspect not. But China is not in the same situation. China there's no bubble in China. If you go back to the 2009 low, it made a low then too, okay? You look at where it is now, it's roughly double. Okay, so it's not a bubble, okay? It never got, at one point, we did call a move in the Shanghai that did create a bubble type move, but that was several years ago and it broke since then. But right now, Shanghai, though it's weak and negative, is not at all at risk of collapse type of mode. The markets that are the biggest bubbles, not Europe. It's well above its 2009 low, but not 7-fold or 16-fold, is the US and India. The Sensex in particular, they're bubble type stock markets. And when you look at the price charts, they just look like, well, it's just going to go on forever, right? It's an upward curve and you don't see any particular technical vulnerability on a price chart. But when we run our quarterly momentum charts, we had in that recent Sensex report, for example, it echoes precisely what we're seeing in the US stock market. Namely, a structure not far below the market such that when you get into next quarter, you better not sneeze. Single-digit % drops will collapse the momentum structures that have been built under those markets for the last 2 years. Again, if you look at the price chart, you don't see the structure, but you look at momentum, If you saw a quarterly momentum chart, you would say, my gosh, I don't want to break that. And I think it's there for a purpose to be broken. And I strongly suspect in the fourth quarter, we're going to break it, maybe even right in the early part of the fourth quarter, where we get a dramatic asset class shift again to the negative side in the stock market.
I can appreciate the sort of the macroeconomic background, if you will, because also in one of your recent reports, you compared this move in gold to the post-COVID move. But I'm wondering whether the geopolitical and global economic background can support that kind of a move again here, given everything else.
Well, the monetary excess, remember the COVID situation, the Fed went berserk. Fed started, even bought ETFs. The Fed bought high yield corporate debt ETF, HYG. They bought that stuff outright, just like the Bank of Japan had done. Highly unusual for the Fed. Plus, they cut rates drastically back down. You know, they'd been near zero for 10 years or so, and they took them up. And then when that event happened, they took them back down again. And only in the last year or so have they taken them back up again. But basically, they spoon-fed the market free money again. They panicked. Now, at that point in time, a lot of markets got the benefit of that money flow. But that's not always the case. In other words, when the Fed panics, it doesn't always help the stock market. There's a point at which the Fed has created a bubble in the prior years. When that bubble breaks, especially in the stock market, they've never been able to stop it from breaking. You go back and look at the dot-com bubble. They cut rates in January of 2001, twice in the same month. Literally half dozen months off the high of the market. Market was really not overtly into a bear trend at that point, but they cut rates twice, and they cut rates for the next 2 years, and yet the market collapsed. 2007, just like now, it was mid-September 2007. Only then it was an ambush. Nobody expected the Fed to cut rates. They cut them by a half a basis point. September 17th, I think it was, 2007. At that point, you rallied sharply for the next several weeks in the stock market until October 2007. That was the top. Fed continued to cut rates for the next few years, and the market collapsed anyway. So it doesn't help. Once the bubble breaks, the Fed will try to respond and cut rates and monetize the situation, do anything they have in their book, you know, but it doesn't work. Instead, the money flow goes somewhere else. If you go back to 2000 to 2002, and you bought gold then, you did quite well. Also, if you bought T-bonds then. And in 2007, when the market peaked in October, if you bought gold and bought T-bonds, you did great. And for the next couple of years, gold went up big. Well, I think the same situation is now occurring. Gold has already said, okay, I'm resuming. T-bond said, okay, I'm out of the hole. I've broken out. I'm going to have a multi-quarter surge. And I think the stock market breaking down will merely precipitate the Fed into what they did today. You know, they're nervous about something. They should be. But it won't work. It won't save the stock market.
That's a scary message, especially when you consider that I looked at it recently, and I believe that in 2017, it was on the exact same date, September 18, that they did a 50 basis point cut. So this is an exact copy of it. Of course, there are other moving parts.
The only difference is that we anticipated it, but maybe we didn't anticipate the 0.5%. The anticipation was more for a quarter. Back then, nobody expected it, so it was really a surprise. And so you did get a surprise rally for the next 3 weeks. You went up 7% more in the S&P. And then that was it. It was over. This time, to some extent, we've anticipated it because we bid the market up prior to this cut. The only difference is the cut was a little bigger than a lot of people expected. Now, I'm not arguing they're going to go up another 7% for the next 3 weeks, but it wouldn't shock me if you try to hang around up here. You've already made the new high in the S&P, so you've made a headline. Okay. Well, what you don't want to do now, if you're a bull and you believe what Powell says, the economy's doing great. Okay. What you don't want to see is the market ooze back down a bit, particularly not about 4%, especially on the NASDAQ, between where we are now and where you are in the next quarter. Because at that point, then it's seatbelt time.
What's the significance of that 4% specifically?
Of what? The upside in the stock market? Oh, the
Yes,
4%. Oh,
the
yeah.
4% in.
That's where if you drop 4% from the current price,
Yeah.
I'm gonna hit a number based on quarterly momentum of the NASDAQ that will blow out a floor that's 2 years wide.
Okay. Oh, that's what
Okay.
you
In other
predict.
words, if you saw the quarterly momentum chart, you wouldn't see the price chart, which is upward, positive zigzag. You would see instead a repeated use of a same level over and over again, such that you don't want to go back there again. You do, you're going to break it. And that's about 4% below the market where we are right now.
That's not
Uh,
very reassuring. I mean, at 4% doesn't
well,
seem like a lot of volatility.
that won't upset anybody getting there, right? It
Hmm.
did not in 1987 either.
Hmm.
I caught that move in a very small way. I'm not bragging, but I did catch it, and I was a broker then. I was not running MSA. This is 1987. I started MSA in 92. But the quarterly momentum of the S&P back then was precisely the same. It was an overlay of the current NASDAQ 100 quarterly momentum.
Hmm.
And I'm not only seeing it in the NASDAQ, I'm seeing it like in the Sensex in India. I'm seeing a variation of it in the S&P. I'm seeing it in various major sectors of the stock market, the same type of quarterly structure where while price has gone up and it still looks happy, it's an upward zigzag. On quarterly momentum for 2 years, you've been banging down to the same repeated support level. And you don't want to go there again. You go there now and you can break it, you're gonna puke. And that's what we're saying. Now, does it have to crash? No, but I'm saying that in the past, when this pattern is set up, you have a crash type event. And it's very rare to set this pattern up.
Hmm. It's interesting to think about you starting MSA in 1992. I don't think my parents had met in 1992 yet, so
Okay. Uh,
that's it's a long time. What do you think?
uh,
Do you think basically what I'm getting from this though, Michael, is that you think that gold is kind of sending a larger message, like gold is kind of
yep.
trying to tell us something. Do you think that's the
Yep.
case?
I wouldn't be shocked that all kinds of events happened, not market related, but somewhat market related. I don't think there's going to be a Federal Reserve in a handful of years. Okay. I don't think you're going to have dollar be a reserve currency. In fact, I don't know you have a reserve currency out there. I think the world's going to shift to gold-backed currencies. And I think reality is going to force them into that. And it's unusual that right now that recognition is coming from places you wouldn't expect it to come from, like China, uh, or Russia, but the contagion will happen because once the events occur, then certain intellectuals, academicians are going to say, hey, this fiat money stuff where there's nothing behind it really hasn't worked well. We've
Hmm.
had nothing but boom bust cycles constantly, varying in height and dimension and to the downside. And now we've got the biggest bubble in U.S. stock market history that we just created. Why? Because we had free money for about a decade. What do you want? Free money, people spend it, and a lot of people spend it on the stock market. Therefore, they bloated prices, probably well beyond where reality would otherwise had it. And so when that reality comes apart, you can't put it back together again. It does its thing, and I think that's what we're about to do. And I think that's the reality nobody's talking about. They're talking about current data points. Forget the current data points. S&P went up 7 to 8-fold. There's no bull market in history that's done that. When you look at a Fed funds chart, you can say, "Oh, I can see why. Free money."
Hmm.
Also the money supply growth. Uh, so anyway, it's a bubble going to break, and when it breaks, it will create real world, have real world implications, painful, just like 2008 and 9. This time it's likely to be worse because the bubble is far bigger, far more protracted in time and dimension, and it's not worldwide. It's localized. India is one example. We're definitely the prime example.
Hmm.
Uh, China's not. China, yeah, it's probably going to go down with us, but it's not going down like we're going down. They're not a bubble. So anyway, I think that's what we're facing. And I think gold knows the outcome of this. And I think that's why it continues to drive north, knowing what's coming.
Hmm.
Remember, it's not a follow. Everybody thinks gold follows data points. No, it doesn't. It anticipates data points. Data points come later and you say, oh, now I understand. It's that kind of market. It's a wise market.
I do want to talk about that later on as well, because it seems like this might align closely with your anarcho-capitalist views on the world as a whole. But I do want to dig deeper in on gold, and specifically from the perspective of the stocks before we do that, because the money-making gold producers, the ones that at least can keep the ASIC down, their production costs, they can keep them down. They're making money. Their stock prices are going up, but that's not yet translated into the risk on non-revenue generating juniors, which is typically the things that I like being
Expected.
irresponsible on.
Mhm.
What's momentum telling you there?
Well, what's telling me is that the upturn we've seen in the miners, well, you can go back just this year and see the percent gain that we've had. Like I said, in late March, the GDX was at 31 and a half. It's over 40 now. A big percent move, bigger than gold, I think, and on a percent basis. But when you run a spread analysis of GDX versus gold, you measure where do we close this month in GDX expressed as a price of the percent of gold. Go back decades, 1980s. Or go back, use XAU, which goes back further in time. You'll see that the relative level that the miners held back in the up through, let's say, 2006 or 7 was much, much higher than it is now. And when we had the bear market into 2015 gold, the relative performance of the miners collapsed as well. Not just the net price, but the relative price of miners versus gold collapsed. Now, since 2015, the miners have firmed along with gold. In fact, they firmed a bit more than gold. People don't realize that. It's hard to believe. But you go back to the 2015 bear low and see where GDX is now. It's actually more up than gold is from its low. But they're still very, very cheap, the miners are, relative to gold historically. They're still very, very cheap as a stock category compared to the S&P 500, for example. In other words, if you looked at the spread charts going back decades, you'd say, oh my gosh, this is off the page, cheap. And it's not going down. So when you look at the spread, it's not like it's deteriorating, it's basing. And it's now upticking. In fact, GDX is not far right now from breaking out of a spread chart base relative to the S&P that goes back about 3 or 4 years, where if you plot each month where GDX is expressed as a percent of the price of the S&P, you've got this basing type pattern, and you're right now pushing up through it, trying to break out. So if that occurs, and I think it will, you're going to get a relative surge, not only of miners versus gold, but of miners versus the stock market in general. And I think to some extent that's being expressed by large asset managers, not gold bugs, not little investors, but large portfolio managers who are seeing value, particularly in the larger miners. Now, you raised the issue about juniors. Yeah. Yeah, there'll be a point at which the juniors will get hot as a $2 pistol. But it probably is going to be somewhat lagged to the overall surge in the gold miners. But once the gold miners start to surge relative to the S&P, and as I said, technically they're at the edge right now of signaling that, where it's time to buy them and ignore the S&P, okay? And in fact, if you go back to 3 years ago, GDX is actually up more than the S&P is over the last 3 years. It's hard to believe. But if you look at the spread chart, you'll say, oh my gosh, if I 3 years ago, this same month, if I'd bought GDX, I'm making more money than if I bought the S&P. And it's hard to believe when you look at the price chart of the S&P, but it is a fact. And I'm thinking we're about to argue that it's going to go ballistic, or we're going to break out. Now, that's also going to be an expression, I think, not just of the gold miners and gold, but of a disillusionment in the stock market. So it's not just a function of the miners going up, but of the S&P going down. And therefore, the spread will even be more exaggerated. And hence what? It will attract more investors. So we don't have a gold fever right now among an average investor at all, whatsoever, especially the U.S. investor. We don't have that. But if you do what we continue to do, what we're doing right now in GDX, for example, today, compared to the S&P, you continue that a little bit more, and we're going to have a dramatic move there. And I think part of it will be fueled by large asset managers.
How far away do you think that is again?
I think we're there. I think we're on the cusp, literally. This month may even be the breakout close. We put out a report on it this past weekend showing GDX versus S&P and also GDX versus gold. And it's on the cusp of breaking out both versus both of them in terms of a technical breakout on the spread, which is indicative of a shift in asset class preference. And suddenly this underpriced asset category is going to get goosed. And remember, it's a very small category. So it doesn't take a lot of, a couple big asset managers here or there to take it off the page. And we don't even have the public participation yet. That's very clear, where the public fever just isn't there yet. But when it comes, probably on the back of large asset managers already having made their decision, that's when you're going to see a tonal change in the miners where it's surprising.
Yeah, the contents of the Hoover Dam through a garden hose. That's what Doug Casey likes saying.
Yeah.
So
Yeah.
silver's been much more choppy in the meantime over that 52-week period, though. You just touched upon it at the beginning, but I want to talk more about what's happening with silver. What does that mean? Why is it not just following gold or just being leveraged
Well,
to
it
gold
is
only to the
following.
upside?
It is following gold, but it's following, like I said, like a wild little puppy on a leash. It leads it. For example, gold peaked in April at 2450, and basically you could have drawn sideways for several months. Silver went from, at that point in April, was just below 30, shot up to 3270 by May. So while gold plateaued after the April high, silver gained another, $2.70. So it was ahead, the leash was pulling ahead of gold. And then when we had the pullback in recent months, like in August, gold dropped down to 26. Well, then obviously silver was underperforming gold. Gold didn't have such a drop at all. Gold was yawning, silver had a drop. Now silver suddenly, robust again. And I suspect that over the next couple months, in particular, you're going to see silver remain robust and vastly outperform gold, and perhaps get up to what, like I said, that's sort of a normal level for silver. 2% the price of gold, big deal. It's done it so many years out of the last 50 that it's ridiculous. And if you did that and gold's 3,000, silver could be 60. Don't be shocked, And obviously the percent gain from where we are right now in silver to 60 compared to where gold is now to, let's say, 3,000 is there's no comparison.
Okay. Yep.
Yeah.
Yeah. Why not 4% though? Why not 6% of the price of gold?
It could be. There's no question. There was one point back, I think it was 1980 period when silver was 6.5% price of gold. There's been a couple times it's been up to 3 to 3.5% the price of gold. Now, I don't think gold's going to peak at 3,000. I think that might be just a pause. And I'm saying might be, okay? I'm not pounding the table saying take profits at 3,000. In fact, it makes me a little uneasy that I'm seeing a couple other people say the same thing. Now, we see it as a possible pause point, maybe, okay? Let's assume that is the case, okay? And even silver at 2% would be 60. So, it's even just getting to 3,000, if silver pulled on the leash, you could easily get up to that price level. But ultimately, you go back and look at gold over the last 50 years, there have been a couple bull markets where gold's gone up eightfold, from bear low to bull high over a 9, 10, 11-year period. And well, we started from a low at 1,050, go up eightfold, you're $8,000 gold. Is that something unusual? No, we've done it a couple times before in the last 50 years. And this time we probably have better fundamentals driving it than we ever had before, in terms of dynamics that would panic central banks, for example. So, God, if you go to $8,000 gold, where might silver be? Okay. So, again, I'm not putting a time on that. I'm not saying that's going to happen tomorrow. Right now, what I am arguing is we get likely to get something very dramatic in the very short term.
Do you think the silver stocks in that case also follow? Because if you're seeing, major crash potential here, is there going to be enough demand for risk on assets like silver stocks?
Silver does have a unique attribute in that it does have industrial demand. Now, decades ago, it was photography. Well, we don't need silver in photography anymore. It's gone. Okay. But we now have solar panels. And China is the primary producer worldwide, 80–90% of the solar panels. And in making that, they need the photoelectric cells. Silver is the key component. And its price level doesn't really affect the cost of the overall solar panel. It's a small component, but still it's got to be there. And suddenly the industrial demand for silver from that issue alone, solar panel demand worldwide, is exploding double-digit every year. In fact, it could get berserk at some point. Consider the fact that China is selling a lot of their solar panels to Asia and Africa. And Africa, is not like the US where there's underground power wires laid everywhere, okay? Power stations everywhere. A lot of the people who need the electricity, like for cell phones, don't have underground wiring. So they're highly dependent on solar panels as a source. And so demand in Africa and in other less developed parts of the world is going vertical for solar panels. And China is the main producer. And therefore, their demand for silver, especially in Latin America, as I understand, is enormous to the point where they're like cornering the market down there. In fact, I understand they're even buying raw silver ore at a higher price than purified bullion from the producers of silver in Latin America. So that's a factor out there that who knows whether suddenly it could rise to the point of attention of the public and generate, another lithium type move. We've seen a lot of base metals over the last few years go vertical in ways that people are just astounded by. Why not silver? It has that unique attribute. And if you get into an uncertain world where economic certainty is not clear and reliability of your power source is not clear, and you're worried about things like that, then your demand for solar, perhaps a backyard solar panels, increases, including the US, for example. I understand demand here is increasing dramatically. But what's happened to Texas year after year, and they like to blame it on, the climate change, but the number of people that lost power over a protracted period of time, several weeks at a time, has been incredible this past year. And so, if I were in Texas and I had a home that lost power, I'd be demanding a backyard solar panel situation. So it's that kind of variable that you create uncertainty in the world and you create demand for that kind of thing that could suddenly become a ballistic factor that nobody's even talking about right now. As an underlying jolting factor for silver, the headline type event that is unique for silver beyond the monetary issue.
This might be a good point actually to talk about your not political, but maybe political, but like world views here for a moment, because as again a proponent of anarcho-capitalism, you probably see a world where the markets are free, right, from overregulation and intervention. Do you think if that would happen, do you think market momentum will be more predictable in that case, or would we just kind of see a different kind of volatility, one that's driven purely by private actors and natural?
Yes. Probably the boom bust cycle. If in fact it's been an error that people have made globally, not just in the US, about the role of government controlling this, that, and the other, and constantly increasing the things that government controls, well beyond what we might have imagined 10, 20, 30, 40, 50 years ago, even in terms of what would the government control. Ever since Roosevelt onward, even before him, the increase in the powers of the government in this arena, that arena, this arena, that arena, has just compounded over the decades. And I use the metaphor of a totem pole with two snakes twirling around it. One's Republican Party, one's Democrat Party, and they're writhing up the pole, and the pole increases in size and dimension. Nothing really changes over the decades, no matter which party wins. For 8 years, the Republicans are in power and then Democrats. But the size of the government, its intrusion into this, that, and the other arena of human life is constantly increased. Constantly. More so than anybody 50 or 70 years ago would have imagined. Okay, well, this isn't just true here. Okay. Now, if that's an error, and if it creates dysfunction. And the dysfunction reveals itself finally. There's a point at which the dysfunction is just too much to take. Like, let's say the bubble we just created in the stock market is one of those error exposing bubbles that when it finally bursts and we realize, my gosh, we priced assets off the page for no particularly good, solid reason. And now comes the crescendo of error exposure, which is what happens in every stock market collapse. Some arena was overdone. Either it was mortgage real estate or it was the internet, et cetera. This time it's much broader. Lately it's been, the AI stuff, but really that's not what drove it. That's only recent. But it's been a lot of factors were bloated during this 15-year bull bubble. And when it comes undone, errors are exposed and people say, what got us here? How come we did this, And once errors get exposed, then people look for sources of those errors maybe. And I think there's already a lot of skepticism, even among Fed lovers, that, Fed went too far this time, stayed too high too long. So there's even doubters among those people who generally endorse the concept of the central bank governing the quantity of the money units you have in your wallet. Okay. And if that comes into question, and certain academicians step forward and say, this hasn't worked and this is why, and people start to understand maybe these guys are right. Maybe this is really, this boom bust cycle is just recurring and now it's the worst in history and we need to change things. And you have a sense of desperation on the part of people, not necessarily going for an answer, but going for this hasn't worked and their hands are up in the air. Then you get dramatic changes. I'll give you an example. Javier Milei got elected president of Argentina. Argentina, 50, 70 years ago, was the 7th biggest economy in the world. Major productive country. Now it's, way back at the bottom of the list. It's been governed for decades by two rival parties, basically socialist parties, no matter what they wanted to claim. And they dominated the political horizon of Venezuela to where, government controls everything down there. Okay, so you have hyperinflation, you've got all kinds of problems with rent prices too high, people can't afford housing and so forth and so on. So Javier Milei is an anarcho-capitalist. Okay, first time anybody's declared that in an election. Not a libertarian, he's even worse. He's an anarcho-capitalist. I don't want government at all, ultimately. Not that he's going to abolish it, but he wants to dismantle it. The population was so upset at prevailing conditions that it continued over the decades and compounded. And the youth vote in particular voted him into office, destroying both of the other parties, just knocking them right off the page, totally surprised everybody. And over the last, about a year now, he's done a lot of dismantling. No, he's not abolished government. But he, for example, has sold off whole sections of the government, including one arena that controlled rents. You wanted to rent your apartment, government told you how to do it and what price and so forth. It was all rent controlled from above, not market forces. And once he did that, suddenly rental prices became affordable for the masses of the population that could for decades not afford rental prices. They couldn't, good residents they couldn't find. And it's been a dramatic change. In fact, I even saw an article in a major US, I think it was a Newsweek online. I think it was Newsweek, I'm not sure. It was a major publication that said, the article declared that, said Javier Milei actually cured the rental crisis in Argentina. And I was very surprised to see a mainstream publication in the US actually admit such. But so he's an example of what might happen if the world gets into a situation where Argentinians were. And I think, we're approaching that. And if you break the stock market bubble in the US, I think you're going to have a lot of personal pain. A lot of people claim there's personal pain right now, with relative level of inflation and so forth. Imagine if that got worse. Imagine, for example, that MSA declares, we just dropped too far in the fourth quarter, and we're going to blow the bottom out of the NASDAQ 100, the leader index, and the rest of the indexes will follow it. You're going to have other pain inflicted as well. such as, if you get a retirement account and you lose 20% overnight, you're going to, that's painful, or 30%. So suddenly other factors could come into play, which creates what? Political disorder. And this is why I've been arguing for a year in various interviews that there's no outcome to this election, no matter which side you're on. Okay, I'm not going to take sides. There's no outcome to this election that will be copacetic. Where we'll say, oh, okay, that solves that. No, it's not going to happen. You're going to have a totally uncopacetic political outcome in terms of a sense of stability, normality, normal transition. And that's going to further add to the problems, or maybe the solution of the problems. Sometimes pain is required for people to doubt certain institutions. And you don't have to advocate it. I'm not advocating. I haven't been involved in the libertarian movement since the 1970s, actually. I wrote a book on it back then, and I published it in 2013. But and I spoke recently at the Mises Institute, reminiscing about Murray Rothbard, who I knew back in the early 70s, who's the father of the modern libertarian movement. He passed away in the 1990s. But I'm not involved, period. I don't vote, okay? But I see these events probably occurring. And Javier Milei is not an unusual situation.
I want to talk about gold and silver in that case, though. I mean, if the markets were left to their own devices with no government interference, no QE, no fiscal dominance, no rates control and whatnot, how would you expect gold and silver to behave? How would you expect bond to behave? What happened?
Maybe we go back to enough countries here and there, start the process, revert to gold, and other countries say, hey, they've got a more stable situation than we do, and enough academic doubters. There's a lot of them in Europe, for example, who remember the Weimar Republic, and they know history. And yeah, they've been shut up for the last decades while the EU moved in the same direction we did, and the Bank of Japan did, and so forth. But if suddenly all that stuff doesn't work and starts to come unraveled, people then say, well, my gosh, what did we do wrong? And just admitting they may have done something wrong is a big step. And I don't think it's going to be, oh, let's have the Fed print more money. That's going to work again. No, they're going to realize that it's a constant process. And when the bubble breaks, it doesn't work. And when they print, it creates another bubble. Well, this time maybe not, because maybe there'll be a certain lack of acceptance of the notion that the Fed is the solution. Maybe the Fed is the problem. It's only been around a century after all. It's not some eternal entity, So reality could change things. And it doesn't require some political movement to do it necessarily. It just requires doubt, uncertainty, pain.
Which we do have right now. What do you think happens in terms of currencies in that case? Like, are we going to see private money issues?
You could have some currencies that come to the fore that are, solid backed currencies that aren't fiat anymore, that are backed by gold, in which case they're stable. The government can't go in and demand, double the money supply overnight, therefore degrade the money unit. They live with that reality and that stable money unit. It used to be that way a long time ago.
Does it have to be gold backed? Could it be crypto backed or something else?
Probably. The crypto, I don't know that's a viable alternative. I know the governments are rushing toward it. And frankly, I wouldn't want a government-backed crypto backed by nothing but the government paper and their access to your bank account, because it's all electronified. You know what I mean? So I'm not sure that crypto is going to be the competitor. Technically, we analyzed Bitcoin and Ethereum, and they don't look particularly wholesome right now, technically speaking. In fact, they look negative, and they're trying to rally right now. But we think enough damage has been done in the recent month on Bitcoin and Ethereum to argue some doubt about where they might be in 6 months or a year. They don't look like they're competing with gold at all. I know a lot of people thought that, a lot of young people in particular, 6 months, a year ago. when crypto was having another one of its big bubbles. And, that silver can do that too, after all. Crypto can go from 10,000 to 70 in a matter of a year or so. Why can't silver? Okay. And it's real. Okay. Anyway, but no, I don't think crypto is necessarily the alternative that people thought it would be. In fact, it may be a big negative.
Do you think that a potential gold-backed or stably backed currency will come out of the BRICS countries, or do you think we develop it kind of privately in the West?
Well, maybe out of them, but I mean, already you're seeing a lot of state governments. In fact, I think majority right now have voted. I think New Jersey just did it the other day. Who'd have thought that gold and silver are not taxable? They're treated as a money unit. They're not treated as a commodity. They're not treated as a retail item. In other words, you buy or sell silver or gold, there's no tax on it. No state income tax, no state tax on that. They're not, they are money, in other words, which is an intellectual acknowledgement of something other than the Federal Reserve note being legal tender. When state governments say that, that's in effect an act of secession. When you state that, okay, gold is legal currency, so is silver, we're not going to tax it. What does that say? The Fed doesn't control that. That's like a little miniature rebellion in a way. And I understand that Texas, for example, has even been talking about, gold-backed currency. And, I suspect if certain outcomes occur in the election that they don't like, you could hear some serious rumbling about that, and maybe even secession talk. I understand that's underway as well. It's a minority view right now, but this type of rumbling is out there. And so a lot of the events that we're going to see in various markets over the next few months could coalesce in various different ways that are highly unusual.
Wouldn't we see more division though if that happens? I mean, because you're kind of alluding to potentially Texas having their own currency, and then I don't know, Colorado has its own currency, and so on and so forth. So isn't that going to create more division?
Well, it could be. It also may create a more solid money in it. It's so there's going to be pluses and minuses, but yes, you could have division. So if certain outcomes occur, in fact, the University of Virginia Department of Politics, and I keep quoting them because they said this back in October a year ago, they did a poll in which, they polled likely Biden voters, likely Trump voters, and asked very pregnant questions. Would violence be justified if the other side won? It was double digit on both sides. Yes. Okay. Would secession be justified? It was low double digit, but it was double digit on both sides. Would the end of democracy occur if the other side won? It was double digit on both sides. That was a year ago. It's even worse now. So no matter what the outcome, you could have fragmentation. And again, is this built into the stock market? Is that the level of uncertainty we've never seen before priced into the fundamentals of the stock market? No, of course not. What if it suddenly becomes that way? Deuce is wild, or maybe not deuce is wild. Anticipate it. Think about it. They even did the poll, it was a year ago, and it was dramatic outcome percent results. And you can bet those numbers have increased since.
That's a dark future, if you will.
No, it could be bright. I mean, sometimes you get rid of bad stuff by getting rid of it. I'm not advocating. I'm sitting on top of a hill looking down at it. It's where I stand, and I'm trying to anticipate maybe ways in which you can profit from it. You can't do anything about it, so the best thing to do is to protect yourself. And I think the major way right now is the monetary metals and positioning accordingly in certain other markets. If for example, you're long silver and gold and you think that, if the stock market ever crashed, silver and gold must go down, well, then hedge it by being short the stock market at an appropriate point. Balance your position. But there's nothing you can do about it except anticipate, analyze, and don't get emotional about it. It's just the way things happen.
I think that's the toughest part, not to get emotional about it.
Mm-hmm.
But you're suggesting essentially physical precious metals. You don't, or what's momentum telling you about the ETFs? The paper gold, as people call it.
Yeah. Well, that's a place to be. GLD or SLV or Sprott Physical Gold Trust and Silver Trust, another place to be. Bullion equivalent levels, unleveraged. You can also buy call options on GLD and SLV. So you can buy, you can make time plays on them and with some leverage. You use futures if you want. It depends on you, the investor, whether you're willing to take the risk of leverage and some time sensitive instrument like a call option. If you're not right in the time window, then you could lose, or if your strike price is too high, you might, et cetera. So there's all kinds of tools to use that are all viable. And ultimately, there's a point at which maybe the volatility gets such that if you've captured that and it's been great for you, let's say you get a surge to $55 silver, for example. Well, maybe silver's ultimately going to a couple hundred. But on the other hand, maybe you just made a ton of money in call options. Well, maybe there's a point at which you should consider going to unleveraged and taking those profits and putting in bullion or bullion equivalents instead of higher risk stuff. So again, each investor is different. You've got assets to protect, money to make, et cetera, et cetera. And there's ways to protect yourself if you think the stock market could create vulnerability for the metals at some point. Maybe, maybe not. Possibly this time the exact opposite could happen. After all, in '87, when the stock market crashed, gold wasn't in a dynamic trend, but it went up 7% that week. So anyway, it's going to be an interesting time, and you picked a good time to interview me.
When do you think the next time should be that we talk? When do you expect larger changes?
Oh, early next year, I suspect you'll see a lot of the wave effects that we've been talking about. And then maybe we see a different type of horizon. Maybe it's a little clearer in terms of certain of these fundamental templates occurring, and certain asset categories making major shifts, like the dollar to the downside on a relative to the other fiat currencies. They're all going down in value. We know that, but in terms of one versus another, or T-bonds, we think yields are going to collapse shortly. Now, I'm not talking muni bonds or high yield corporate debt, but U.S. Treasuries. And I think over the next several quarters, I won't speak beyond that, you could get a good drop in rates, largely because of sense of dysfunction in the stock market.
It's actually funny when you said next year, and I was like, oh, that's a long time from now, but it isn't. I think Christmas is in like 100 days or something from today. So funny in that side. But Michael, you've given me more time than you had than you had promised me. So it's been over an hour. Thank you so much for doing this. Yeah. What am I forgetting to ask you? What do you want to add here at the end?
No, that's about it. Subscribe to MSA or check us out. We'll be covering the stock market with intensity over the next several weeks in particular, because the dynamics there are potentially horrendous and sudden. And we're, of course, on top of silver and gold all the time, and the other major asset categories as well. You have to, don't just look at one market. It's a bad idea to just look at the stock market or just look at gold and silver. You got to look at the other major icebergs. They're banging into each other, so.
And that is a wonderful metaphor to move on with. It's olivermsa.com for people listening, and for people watching, it's on your screen right now. Michael, thank you so much for doing this. I appreciate you investing your time in me. We're going to be catching up soon. We'll talk soon, and I'll let you drop off for now, as I'll be moving to my favorite part of this Real Money Talks episode. And that is, of course, the disclaimer, right after which I'll jump over to the CEO barbecue, of course, for Ridgeline and Aurania again. But there is a warning on your screen right now, and I'm not kidding about this. You're obligated to read it, but you're also better off doing so, because this is not just some random disclaimer, oh, not financial advice and all that, although it is that partly. But this is an actual warning that will help you not lose money, which, by the way, is the norm and should be the expectation in the sector. And talking about money, I'm actually here to make money. I make money from the existence of this channel, fair disclaimer and honest confession, specifically from companies paying for the production of these interviews. In this episode specifically, Ridgeline Minerals has paid for the production of their interviews. Aurania has not paid, but that doesn't mean that they're not going to become a paying client over time. Okay. So you should look at this episode and any other episode as marketing. Even the companies who are not paying, they likely see their participation in this program as a chance to do some marketing. So start by understanding actually that most company communication out online, I'm actually moving on to saying that all company communications online, albeit this interview, obviously, their presentation, their Twitter accounts, their website, their news releases even, Those are marketing tools. And although I don't make buy or sell recommendations because there's a clear conflict of interest, in my opinion, many out there do. Many out there will be paid by companies to recommend their stocks. That is an actual business model that exists out there. So you should be aware of that inherent bias. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content, reading, whatever you're doing with it, approach it with a dose of skepticism and treat it as marketing. I'm not a magician. Wish I was. The guests here are not sidekicks. I guess they wish they were. And some of the CEOs are even normal people. So we don't possess any superior knowledge about what will go up, what's going to go down, what's going to go in circles, or what's going to go left to right, back and forth. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the company or all shenanigans or whatever it might be. Sure, this show is called the CEO Barbecue. It's meant to grill the CEO. It's meant to put him on the spot, ask him the tough questions that nobody out there will ask. But I'm not always going to catch everything. Although you shouldn't tell my wife this. I'm not flawless. Matter of fact, I still have no idea what I'm doing. And I've really had facial hair for a couple of years now, basically. So I also lack the experience. I don't have the track record to back it up with. You should not rely on me. You shouldn't blindly trust me or anybody else on the internet, okay? In addition, no guarantees are going to be made here besides one. And that's going to be that there will be forward-looking statements in these conversations. Those are conversations that are general and impersonal in nature, containing hopes for future events that may or may not take place, depending on many different factors, both within and outside of a company's control. Please understand that. Be aware of the inherent risk to investing. Investing is risky. You're risking capital. But also be aware of the increased risk of investing in non-revenue generating companies that operate in the harsh reality of the mining industry. This is a hard business, and please talk to someone who's proven to know what they're doing and talking about, like a professional investment, not like a professional investment advisor. Go and talk to a professional investment advisor who's got the licenses and everything and the track record and everything to back it up with, as well as do more research before taking any decisions on your own. Visit setterplus.ca. That is an official government website where you will find the company's official filings. They're going to tell you everything you need to know about the company. And if you don't do that, you're highly likely to lose your money. I think I've said enough, but there are disclaimers on your screen right now. Again, if you don't enjoy losing money, read them and be careful out there. With all that said, I will actually let Chad Peters into the room because, Chad, thank you for doing this. But it's really not been too long since we last spoke. I'm very happy to see you again. But last time we went kind of in depth as on you as a person, as opposed to Ridgeline as a company. So this time we'll do the opposite, since it has been a while since you and I have done kind of a deep dive, if you will, on Ridgeline. It was a couple of months ago. We did 2 or 3 or a couple of episodes that we really dive deep. But the most obvious and the biggest news that you've had in the meantime was that you went into an exploration earn-in agreement with South 32 for the Selena project. And I think you've done quite a few interviews since, kind of explaining the basics. So I won't spend too much time on them, but very briefly, as far as I understand it, South 32, which is a $15 billion kangaroo dollar mining company headquartered in Perth, Australia. And that's, by the way, $10 billion in real money. So they can earn up to 80% interest into the Selena project. That's kind of the headline. Selena, by the way, as a reminder to listeners, is a CRD target that Ridgeline has in Nevada. And it's a phased approach, with the first one giving them up to 60% ownership, where they have to pay you $100,000 in cash upfront. And again, that's real dollars. And they have to commit $10 million in exploration expenditures over 5 years, with a minimum guaranteed $2 million spent. And then they have to pay you an additional $500,000 before the 5th anniversary of that contract. In case they wanted the additional 20% to bring them to that total ownership of 80% that I mentioned at the beginning of Selena, they'll have to spend an additional $10 million, but more aggressively, so in 3 years. And essentially, to get to that 80%, they'll have to spend $20 million over 8 years. And if they decide to build, like if they find something they like and want to build it into an actual mine, South 32 must offer you a debt facility to fund your 20% share of the mine development cost. And that loan will then be repayable by cash flows, specifically 80% of all the cash flow potentially attributable to Ridgeline, if, again, or when the mine is operational, will go toward repaying that loan until fully repaid. And so, even more specifically, and I know I said I'll be brief, but it turns out I lied, but essentially, and now I'm speculating way into the future, And so all disclaimers apply, but until the loan is repaid, Ridgeline essentially has a 4% free carried interest on a producing Selena, and then a 20% share of the profits that Selena might generate. Because again, first couple of years until the debt is repaid, it's 20% on 20% of 20%, right? So again,
Sure.
way out into the future, but over the first phase, that 60%, $10 million 5-year phase, Ridgeline will be the operator of the project, and South 32 will pay a 10% management fee on top of that as well. And that's 10% on that $10 million spent, which again is over 5 years. So my calculus says that's an average of $2 million per year, which results in an average management fee to be paid to Ridgeline that's going to equal $200,000 per year, again, on average. And so that management fee, together with the upfront cash payment, will cover almost half of Ridgeline's G&A in the first year, if we assume that they keep the same spending tempo as they did over the first 6 months of this year, which, and I'll say it again, on average came up to $72,000 per month, according to the financial statement dated June 30. So I don't feel like listening to my voice anymore, so I'll be shutting up now, Chad.
Your math is better than mine, actually. So you've summarized it really well.
I'm trying. But one of the talking points, or objections, if you will, that I found online was people saying or asking or objecting to the deal by saying that they want all the upside to themselves, right? And others saying that, hey, if the project was as good as you'd previously said or thought it would be, you would also want to keep 100% of the upside. So why give 60% or potentially 80% of the project away?
Well, yeah, no, it's always a tough decision when and each project that we have, we make a decision on whether we're going to partner or advance ourselves completely independently, right? Just based on merit. And there's a few things that actually apply that we look at in after every single drill program, right? Like, and the question is okay, what is the cost of the test, chance of success? And when we're looking at, we those are the two main things we look at, but also the size of the prize is a really important piece of that whole thing too, right? And I think I stole that from Craig Perry, but it's a great 3 ways to kind of quickly look at a project. And as we advance the Selena project over the last 3 years, we've advanced it from a grassroots discovery to something that has some pretty significant potential as a CRD system. As we realized, okay, the size of the prize is getting really big, but the cost of the test is rising as quickly as the size of the prize, right? So with our most recent program, we proved that this system, we haven't drilled out of mineralization yet. We had 600-meter drill holes that were still bottoming in CRD mineralization under the original chinchilla oxide discovery. So that meant that to fully test the chinchilla sulfide target, which is actually our primary target on the project, we think that is the direct analog to going out and finding another Taylor sulfide like what South 32 is looking for or developing in Arizona right now. To go fully test that target, we're talking about 1,200-meter drill holes, maybe even 1,500 meters at their deepest. For folks that aren't familiar with the cost of drilling in Nevada, we're talking about well over $1 million drill holes to fully test, just for each individual target. That's where the cost of the test suddenly became too high and too much of a hurdle for us as a company, I think, to overcome, given the market conditions, our current market cap, and our cost of capital to actually raise the funds to go out and do that drilling. It was far too risky, especially when we have really great irons in the fire with our deals with Nevada Gold Mines, right? With, we're seeing millions of dollars being spent at Swift and Black Ridge over the next few years. We want to make sure that we're not blowing out our cap structure to go after a target that, frankly, up until we did the deal with South 32, it's been tough to get buy-in from the retail market, right? The big question for every person that said, hey, you gave away 100%, there was just as many who said, why should I care about a silver, lead, zinc discovery, right? They want to see gold or they want to see copper. So for us, we do believe that there's a very significant discovery to be made here at Chinchilla Sulfide. And we want to bring in the right partners who believe in that same exploration thesis and have the funding to actually step up and put some serious money in the ground. And what the project requires from here on out is about $10-15 million going into the ground as quick as possible. And if we're right, I think we have potentially world-class CRD system, and I would happily own 20% of that fully carried all the way to commercial production versus 100% of something that I can't afford to fund in this kind of market.
It's a great answer. It seems like maybe you even thought about it before signing the big deal.
Possibly, yeah. We hummed and hawed over it just a little bit, but
do you still think it's a porphyry, by the way?
Yeah, well, the thing is porphyries tend to form as clusters. So you can have, in our case, the Butte Valley porphyry, which is just off the edge of our property boundary. That's probably the big boy in the district. Like that's the big, well-known, shows up multi-kilometer system. And we think that there's a porphyry center or a plug of porphyry on our project that is probably directly related to that bigger Butte Valley system. So yeah, as the project develops, I think the primary target is still very much go and make a major discovery at the chinchilla sulfide target, which for folks that aren't familiar, sits right off the edge of that Butte Valley porphyry. Go make that discovery, hopefully, and be a part of that. And then the next push would be, okay, what are the other targets on the project? What else can we, how else can we expand and make new discoveries? And that would be part of that, is going after the porphyry.
Hmm. Is that what South 32 came in on, though? I mean, you obviously spoken to their geo team extensively. So what do they tell you? Are they excited about the potential for porphyry, or are they mostly interested in the CRD potential here?
Well, they certainly aren't discounting the potential of the porphyry, but it's very early stage, right? It's a conceptual target. It's identified with geophysics. There's no outcropping system there. So they really hung their hat on the CRD target, which is chinchilla sulfide. They were very comfortable with us making direct comparisons to both the scale and depth and host rocks that you see at the Taylor deposit. You see a very similar scenario at Salina. Even the fact that we have outcropping mineralization at Chinchilla oxide, well, that's analogous to their Hermosa discovery, which is a silver, manganese, and lead open pit, which is going to be, I think they're going to be actually mining that first, and then they head underground. I believe is the next step, right? So there's a lot of similarities there. Of course, we got to go prove it with the drill bit, but that's what really drew them in initially.
Why I'm asking that is because the first step is you operating the project, them spending $10 million, which of course is a lot of money. And it makes me wonder how much autonomy are you really getting in that process? Like, who's really calling the shots here? I understand you're operating it, but do you consult them, and how much decision weight do they get?
Well, I think it really is. I don't think there's just in the early discussions that we have with them, it really doesn't feel like there's a South 32 and a Ridgeline camp. It's just we have an exploration team of geos on both sides, both companies. Everybody's really aligned on the goals, and certainly if South 32 feels very strongly about a target or an initiative, they have the ability to push that initiative ahead, and I have no problem with that because they've made really significant discovery at depth with the Peak discovery at Taylor. They've had a lot of success there. If they want to see a certain target drilled, we'll absolutely oblige. But we do have. I'm really excited about the fact that we got to run the project because we've been able to keep their team really engaged. They're excited. We've already modified the proposed MT survey to be more consistent with what we wanted to see for coverage, et cetera. And that's going to be hopefully done this fall. And that MT survey is a geophysical technique that really sees really deep, was used very effectively at the Taylor deposit to identify semi-massive and massive sulfide bodies at depth. So down to depths of over 1,000 meters. So that's what we hope to do at Chinchilla sulfide. And then we'll build our drill program off of that next year.
I'm excited about the fact that you're going to be the operator too. And I like that because I also have a firsthand experience in that with one of my holdings that also has a big JV. But at the same time, also big ships take a long time to turn, right? And they can be very bureaucratic too. So are you seeing that as a risk or a challenge? And what does the contract say about potential disagreements in the meantime or slowdowns?
Right. Well, everything goes to vote in our steering committee, right? So there's a 4-person steering committee, 2 representatives from Ridgeline, 2 from South 32. We meet quarterly to officially review budgets, exploration plans, et cetera. If we were to not agree, just could not come to a decision on how to move forward on a certain aspect of the project, then South 32 has the veto to move forward with, right? So if it's a stalemate on votes, can't come to a conclusion, South 32 gets to decide where things go. The great thing is, in my experience, I've done a lot of JVs in my career, both with Ridgeline and now previously with Premier Gold Mines, with Kinross. We had a JV with Newmont and another one with Barrick. It really comes down to relationships, right? Like I've never been in a situation where it was ever required for a steering committee to go to essentially a veto decision, right? Typically there's always middle ground to be found with these groups. And our team has a really great relationship with South 32. We've built, I think, a lot of credibility with their team on the discovery that we've made so far at Salina and where we think it's going. And so I don't foresee any issues at this time. I think we're all pretty aligned.
Right. So they have as I said, a $2 million kind of guaranteed spend, so they
Sure.
cannot walk away before spending $2 million on it and giving you that $100,000, right? What about what happens if they decide to kind of walk away in the meantime? If they've spent 4 million, they get
Sure.
nothing, or like, well, what do they get?
It's all or nothing. So they have to spend 10 million US to get the initial 60% interest. They have to spend that cash. So they spend 9.5 and they decide to walk away, then Ridgeline gets 100% of the project back, all of the data associated with the project. And we carry forward advancing it on our own from there.
Right. Okay. Fair. To go back to what you said about you potentially working as one. I mean, there's no Ridgeline and a South 32 cap. Has a strategy changed about how you're gonna approach this and what you wanted to drill now that you're gonna be working with them and you have, I suppose, more money available to you?
Yeah, I think the nicest change was we were South 32, the way it works is essentially, we have the initiatives that we want to, execute on over the next 4 months. It's up to Ridgeline to, budget out programs, for example, the MT, put out for scoping with different groups, get quotes. When we were initially doing the scoping for the MT survey, we made it far smaller than what South 32 envisioned. And the reason being is we were operating like a junior. So we were like, well, this is a priority area over chinchilla sulfide. So we'll focus on here and maybe do a little bit of survey into the shoulders of the target, but we'll just focus on this one area. And we were just trying to, be smart with the money and all that. And the South 32 group came back and said, look, we want to see a property-wide survey. We think there's more than one discovery to be made on this project. It's a district scale land package, and we want to have a survey on the whole project. And so that was a breath of fresh air, because it's been so long, such a tough market of being a junior and really having to scrape pennies together to make programs happen, that to have a group that was looking at it from a big picture and not afraid to spend a little bit extra money to make sure it was done right. That was awesome. Yeah. So that's a really nice change.
So how much of that money do you think you're going to spend this year if you're calling the shots on the budget here?
I think we're going to spend somewhere between 350 and 500,000 before the end of the year. And it really comes down to contractor availability. So if I can get the water well drilled and the MT survey complete before the snow flies in December, we'll spend about 500K. If we can only get one of them done, roughly half that, right? So, but the nice thing is Selena is pretty accessible. So we should be able to, even if we get part of that work program done in the fall, if that extends into April, May of next year when the snow's melted off, that's not really an issue.
Is any of that work going to grow your G&A now that you're going to be doing more work than previously expected?
No, that's the beautiful thing. A big part of a change from our previous deals is the Nevada Gold Mines deals are run by Nevada Gold Mines. So we collect zero management fee. It doesn't help our G&A at all. In this case, we're not expanding our team to support the program at this point. It's not required. And we're taking a management fee on this. So yeah, if for every dollar we get a dime, right? And it's going to significantly cut our G&A and really help it's still a tough time for juniors. And I think anytime you can cut costs overhead and make sure the money's going in the ground, it's a huge win. So that's a big part of this deal.
I actually just came back from the US and I have an actual dime, which doesn't look as good as you're making it sound. But
oh yeah. Well, if you put 1 million of them into a pile, it's a lot more interesting, right?
That is very interesting. 100 grand is what they're giving you up front, though. I suppose, or they have given it to you, or it's going to become any day now because the deal has been approved. So it's going through.
Sure.
500 grand, you're getting 50 grand on top of that. So 150, not going to quite cover your G&A over the rest of the year. But you also just did you raised some money recently. Does that mean you won't be back into the market for a while here, or how do you see capital raising going forward?
Yeah, well, we're actually going to see we're going to see about another 150 on top of that in reimbursements that'll be coming back on our first cash call with South 32 as well. So they were kind enough to pretty much, as this deal was getting done, there was permitting hurdles to overcome, consultants to pay, land fees to pay, all the way up through August 22nd when the deal was done, that we covered ourselves. And South 32 was pretty awesome about being like, look, we'll cover those costs, even though they technically fall before the actual deal was signed, right? So we're going to collect another 150 there, which is great. And we did do the raise in May. We've been fairly aggressive about expanding land positions, growing, et cetera. So it's not like that's going to last forever, but if we choose not to drill Big Blue this year, we can sit on the cash that we have available for quite some time. If we want to get more aggressive with doing a drill program at our 100% owned project, then yeah, we'll need to raise capital.
Okay, so that's a good point, because I was wondering how you're going to balance the focus of the money as well as the time for you going forward. But so maybe holistically, how are you going to balance the focus again, specifically really the time and the capital devotion between Selena, Big Blue, and everything else you have going on?
Yeah. Well, the nice thing is for the first, over the next 8 months, it's not a huge time commitment for us to support the Selena program. Doing an MT survey, once you quote it, set it up, get it approved, it's the actual contractors that spend 40 days after that collecting the data, right? Which is minimal oversight required on our part. So we're able to oversee Selena, participate in our JVs that are going on with Nevada Gold Mines, and really be aggressive about trying to advance our SWIFT project. And that's probably going to be the primary focus of a lot of our team's time. Call it over the next 6 to 8 months.
Are you guiding anything in terms of timelines for results or news releases? What do you have coming up? Kind of, well, historically, if you will, not historically, I'm losing the word, but you know what I mean.
I think I know where you're going. So we're looking at doing we just actually announced some really good results during Beaver Creek for our IP survey. I think it kind of got lost in the noise, to be honest, with Beaver Creek and everything that was going on. But we've identified two really good looking porphyry targets at our Big Blue project. Very strong IP chargeability anomalies directly where we expected them to be. They correlate with other with magnetic geophysics. One of them sits directly underneath the historic Delcor mine, which produced 95,000 pounds of copper at 6.2% back in the early 1900s. So we're seeing a really, really robust system coming together where we're seeing outcropping mineralization that we believe extends down to depth, down into these IP anomalies. And so we really want to see a maiden drill program on this project. How we finance that, we're still working on, right? Like, we're not in any big rush. We're seeing a lot of money. Like, we're seeing $4 million being spent just by our partners alone through the end of this year. Most of that is being spent over the next 4 months. So Swift is being drilled right now as well. So we're seeing a lot of meaningful exploration being done on our projects. We're willing to kind of wait, make sure we finance at the right time, get people excited about the Big Blue project. And so whether that's this year, whether it's into the first few quarters of next year, it really just depends on how we want to advance it.
I was thinking of the word chronologically. I mean, I'm not the sharpest tool in the shed box, but let it be known I remembered the word. You also still have to get you got to get the permits amended, I believe, for Big Blue, as far as I understand it.
Yeah,
because your targets have changed, right?
Yeah, so we've just the targets have grown. We added another porphyry target, and we expanded the land package. So it's only about a 30-day process to amend. We already have an exploration permit in place, and it's fully bonded for. So it's just a matter of going back to the BLM, saying, "Hey, we want to move these pads from here to here." They come out, they check the ground, make sure that there's no arrowheads or any archaeological or biological issues that could be an issue, and then they approve it. So if we put it in October 1st, I'd expect approval before the end of the month.
Is there a chance for arrowheads or something else? I mean, you've probably walked the ground, so you know what there is.
There always is, but in the area where Big Blue is, anywhere in Nevada, you can have artifacts. But in our case, we're out in the middle of a very dry, barren valley. It's not where any Native American tribes would have ever wanted to camp or spend any time if they could avoid it. Right? There's no water, there's no cover, there's no trees. It's just a flat valley floor. So would be highly unusual. What we might find is an old tin can from 1945. Right, which would actually technically be considered, somebody ate a can of beans on the back of their wagon or something like that, and that could be something that they'll just say, "Hey, don't put the pad here, move it 150 feet to the north, and we're fine." Right, and that's kind of how it works.
That's very interesting. I didn't know that's actually kind of how it worked about cans of beans and stuff like that. How deep do you want to drill it once you get those permits?
The deepest holes that Big Blue would start, they'd bottom out at about 1,000 meters. Yeah.
Okay.
And you have mineralization outcropping at surface. So those holes, we'd be drilling fences of holes with the shallowest holes could be 300 meters. Deepest holes could be upwards of 1,000, depending on what we see.
Okay. How much is the deeper drilling going to cost you? You just mentioned drilling in Nevada, not cheap, but what about the deeper stuff here?
Yeah, it's tough. It's always tough to say exactly because you can run into bad ground conditions, which can dramatically increase your cost, and you can't really plan for that particularly. But a deep hole in Nevada, if we pre-collar it properly with an RC hole and then finish with a core tail, I'd expect that we can probably drill for somewhere around $450 a meter, all in.
Oh, okay. Well, that's not too bad.
No, that's not too
The deep targets are not the only thing you're drilling. You're going to be drilling for the skarn as well. So what is the split going to be between those, on the shallower end, 300, and on the deeper end, the 1,000 meter holes?
think it's going to be kind of an even mix. We certainly like the porphyry's the big prize, right? But we can't afford to go out and drill 5,000-meter drill or 1,000-meter drill holes right now, right? So it'd probably be something like, maybe 50-50, about 50% of the budget going towards high grade skarn in the Delker area, and another 50% being focused on going after that porphyry target and hopefully seeing something exciting.
Having mentioned Delker, what do you think? Is this and it's really about what you think. So this is a part of the speculation, but is this a standalone porphyry, or is this part of the Delker porphyry that's kind of throwing off the IP?
Yeah, we think it's part of all the same system. So we think the Delker porphyry is about 400 meters down, directly down dip of the structural zone that feeds 3 mines on the project that were all historically mined in the early 1900s. So no one ever checked that deep. They only mined to about anywhere from 5 to 20 meters depth, depending on the mine site that they were at. So we'd be going after the high grade skarn near surface. And then there's also that component, the deeper porphyry, which could be very exciting. That kind of starts at around 400 meters depth. But like when I say 1,000 meters, it's specifically to be able to hit the top of the target, drill completely through it, and just see what you see, right? And that's part of these maiden drill programs. You just don't know what you're going to expect. So you kind of drill deeper holes to get a good feel for it.
It also seems like the Ohio target that you're excited about now, because I believe the surface work is where the IP kind of coincide. That's kind of how you came up with the target. But it also, that target shows higher molybdenum values than the Delker porphyry. So is there any major significance to those higher moly values?
Yeah, there is. So moly tends to hang pretty tight and close to porphyry centers, right? It doesn't like to travel far. It's not a very mobile element. So if you're seeing elevated molybdenum in a porphyry system, it typically can be used as a pretty effective vector to get you kind of towards the heart of the system. So the big question we have is, the whole Delker and Ohio targets, at one time they were very close together, right? And then Nevada got ripped apart, essentially. They call it extension. For geology folks. But it got ripped apart. Everything got kind of pulled and torn apart and ended up about 2.5 kilometers away from each other, right? And so is the Delker and the Ohio targets actually one porphyry system that has been torn apart, or is it actually a cluster of porphyries? And Ohio and Delker are both standalone systems, and that is very common as well. You see it all over the world in porphyry systems. But one thing that we do know is that we see dramatically higher molybdenum and dramatically higher gold values at Ohio versus Delker, which to me suggests getting closer to the core of the system. So we'll find out soon enough if we get a drill hole on it. So
is there a big difference topographically as to where Delker is and where the Ohio target is?
No, we're actually really lucky. As I mentioned, it's just a valley floor at Big Blue.
Oh, yeah.
So so it's all pretty flat.
Okay. Was it so the drilling they're gonna do, the deeper holes, are all of them gonna be on Ohio, or are they split between different targets?
Well, that's an interesting, so we're struggling with that right now, and I don't actually have a concrete answer. So more than happy for folks to chime in the comments what they'd like to see drilled. But right now I really like Delker as a first pass. The reason being is apologies, sorry, there's a vacuum going in the background, kind of a little loud. The Delker project, or the Delker target, it outcrops at surface. It's a historically producing mine. It has the highest chance of us making a significant discovery relatively near surface. So I think that's going to be our primary target in a maiden drill program, both the porphyry and skarn component of that. And then, if we have success, the deeper Ohio target is very high priority, but you kind of got to work your way in. My VPX Mike likes to say, keep 1 foot in the ore, right? So start at known mineralization, high grade copper at the Delker area, hopefully make some a meaningful discovery there. And then that will help guide our exploration on the deeper targets like at Ohio.
You're getting a hold on this, trying to motivate engagement here for people to comment. I like it. And I'm not hearing a vacuum, by the way, in the background, but
oh, you're not? Oh, great. Yeah.
With the there's an alluvial cover over the entire package, as far as I understand it. But there is a secondary chargeability high that's south of the Delker mine, and you said in the NR that it's kind of under a shallower cover, if you will. Sure. Why not focus the efforts of the first pass program on those to kind of better understand whether the IP and the chip samples are representative?
That's absolutely. Maybe I wasn't clear in but that Delker porphyry target plus the Delker mine itself, those are our 2 primary targets. So the porphyry that's in that cross section that's in our press release, that is right, just a kilometer south of the Delker mine, and it's directly down dip of the Scarn Hill adit, which is kind of a continuation of the Delker trend, if you want to call it that. The two mines were mined kind of at the same time, same ore body, same type, all that kind of stuff. So yeah, no, that's the highest chargeability anomaly anywhere on the project, was directly underneath the Scarn Hill mine. So we had up to 25 millivolts per volt. Just to give people kind of an idea, I guess, if you're looking at, well, what does that mean, right? It's what you're looking for is you're looking for contrast, right? You want to know how elevated is your chargeability high compared to background. So if your host rock is intrusions or carbonates, and let's just say in the carbonates, your background response in millivolts is 4 millivolts per volt, and then you're seeing 25 millivolts per volt in the chargeability high. What that shows is you're seeing 5 to 6 times elevated values, right? So something has happened to that rock. That rock has had a bad time. It's been cooked up. It's been hit with fluids, and it is not happy anymore, right? And that is what you're looking for. Is you're looking for that pissed off rock that's had a rough day. That's where your deposit sits. And so, that's the important thing there is we're seeing 5 to 6x elevated anomalies there, which shows, okay, there's something significant. And that happens to just sit directly beneath a historic copper mine. So you start layering those different aspects into the story, and it becomes pretty compelling.
It's so angry, it's turned purple.
That's exactly it. Yeah.
I like that explanation. That's one way for my 5-year-old brain to understand it. Seems like you've been training on your kids with explanations. But when do you go and do all that work? When do you think you're going to have it done? When do we see news releases?
Well, we've already put out our preliminary results for the IP survey, kind of highlighting what we think the opportunity is. We're following up. We're remodeling the geology to kind of fit that survey. So kind of unanswered questions that you can't see at surface. The IP is helping kind of answer some of those. So we'll probably come out with an updated geologic model, refined targets, and news on our permitting later, probably I'd say late October. That'll be the next step. I'd like to run some additional IP lines to extend out. There's some open-ended chargeability anomalies on both target areas. So we'd like to expand on that as well before we do any kind of drill program. So I'd say you're going to see fairly regular news on Big Blue all the way through October, November. And then that will, I think, help guide people. Will start to see, what our strategy is for both financing and a maiden drill program as those things develop.
Right. Okay. I heard some news about fires in Nevada and whatnot. Is all that under control? First of all, you seem okay, but is everyone okay? Everyone on the projects, everything going as planned?
Yeah, no, I actually missed Beaver Creek, unfortunately. I guess you and I were going to do this meeting at Beaver Creek, right? I missed Beaver Creek this year because the Davis fire took off on the Saturday before Saturday of last week. So we got evacuated for 5 days from our home. Luckily, no one in our neighborhood lost any homes or was hurt, but it was quite a hectic kind of 4 or 5 day period there where the high winds were making it very hard for them to control the fire. And so the best place for me was here at home with the family. So setting up meetings now with my shareholders that I missed meetings with kind of off the books. Yeah.
Well, that's why you told me you only have 30 minutes, and I've already taken more than that. So last question here before I let you go. What else are you doing over the coming weeks and months? I suppose that, well, everything that you told me is a lot of work. So I suppose that's going to be the focus. But are you going to be looking for new projects that you can go and explore on your own, or are your hands full for the time being?
Yeah, no, we've actually been pretty open about the fact that we were actively staking a new project this summer. We're kind of just rounding out what that land package looks like now. So I think we'll be coming out to the market with some updates on that soon. I always want to have at least 2 projects, right? I never want to be like hanging our hat, on, well, if Big Blue doesn't work, where do we go next, right? Because it's possible, right? Like Big Blue looks phenomenal. Probably the most excited I've been about a geophysical target in my career. That being said, statistically, it's tough to make discoveries, right? And so if Big Blue were to miss, I always want to have something in our back pocket, the next big thing. And that's what we're working on now. So hoping to have some news out in October.
Got it. Well, hopefully I'll get an update on that soon, but I'll let you do your thing now. What am I forgetting to ask you? What's important to talk about in the meantime?
I'd say just anyone that's really interested in the story, like reach out to me directly. My email, my personal phone number, they're all readily available on our website, on our press releases. We have a lot going on. I think there's very few juniors in North America right now that can have that mix of partner funded exploration on very high potential projects, along with some 100% owned projects that I think still get people's motor running. So if you like what you see, please reach out, and I'd love to do a one-on-one meeting with you.
Well, again, I'll be there to follow along. I know you have to run. I wish we could make this 2 hours long, but you only told me you have half an hour. I've already taken 30 something minutes. So thank you so much for doing this. Go and do your actual work, and we'll speak soon. And I'm, in the meantime, going to be moving on and going to Ecuador, where unfortunately I won't be surfing the Pacific coast, but fortunately I'll be looking for gold. Luckily, though, I won't be doing that journey on my own, as I will be joined by Keith Barron, who's the CEO of Aurania Resources. The company's listed as ARU, that'd be ARU, and the TSX-V in Canada, where an average of about 57,000 shares trades each day, and I see a 52-week high of 70 cents and a 52-week low of 20 cents. Equity market cap of about $58 million and roughly 96.5 million shares outstanding. Today, this is a 60-cent stock. Aurania's last presentation shows me 5.2 million options and 36 million warrants outstanding, making up for an almost 138 million fully diluted shares. The last officially filed financial statement, which is dated June 30, 2024, shows me $3.2 million in current assets, most of which, $3 million to be specific, at the time was in cash and cash equivalents, with, of course, some prepaid expenses and some account receivables on top of that. There is also debt on this balance sheet, though, which is not too common for junior companies. Hopefully, I'll get a word in on that or a question in on that later with Keith. And that's specifically the long-term liabilities that are relatively high. They sit at almost $10 million, mostly in the form of promissory notes written by the company to the CEO, so Keith Barron, where basically over a period of, 7 years, I believe, so between 2017 and as of earlier this year, Keith has been giving loans to the company, some of which, about $2 million of which was already settled earlier this year, as well as, so they basically converted that over $2 million in common shares at 20 cents per share. The loans Keith has been providing are, by the way, unsecured and carry a 2% flat annual interest with a 12-month plus 1-day maturing date. There are also some current liabilities, by the way. They're not low either. They're mostly in the form of account payables and accrued liabilities. Doesn't exactly say what they are, so I will be asking Keith about that later on. But they are sitting at about $3.6 million on the balance sheet. In terms of corporate expenses, the same financial statement shows me that when excluding share-based compensation, which, by the way, was also almost $1 million worth of stock for the last 6 months, Aurania spent about $160,000 per month on average on what I would call administrative expenses, with office in general representing about half of that spend. So some people call that part G&A. I call the whole thing G&A because you also have investor relations in here. Investor relations account for about 27% of the total administration spent, and there are various other fees, really, so that being management fees, administration fees, regulatory fees, and whatnot, accounting for another, give or take 23%. As to the exploration expenditures, the total sum that was spent for the 6 months on exploration and evaluation, that's the 6 months ending in June, at the end of June 2024, they came up to almost $4 million, which is an average of over $660,000 per month for that period. However, and more specifically, $3.2 million out of that $4 million went into concession maintenance of the permits in Ecuador, representing over 80% of the total exploration and evaluation cost that was recorded for the period. Summarized, Aurania's total monthly spend came in at over $820,000 per month on average. And in terms of ratios, this means that they spent about 20% of that money on administration, and 80% is recorded as exploration and evaluation. Again, that $3.2 million cost that I told you, though, you should keep that in mind. But all in all, if you just take the entire amount that's recorded in the financial statements, that's going to give us a 4-to-1 exploration to administration ratio. As always, though, please understand that this financial statement is, well, every financial statement really is nothing more than a snapshot in time. In this case, it is specifically at the end of June of this year, and it simply shows you what the finances looked like on that exact date and nothing more. Finances, though, are a fluid thing, and I could be making mistakes in my reading of them. And as I always like saying, don't tell my wife, but I am not flawless. So by the time you're watching this, please head over to the company's website as well as setterplus.ca to make sure you're getting the full picture and look at the most up-to-date numbers yourself. For Aurania, that full picture is fully focused on Ecuador, Southeast Ecuador to be specific, which means that this is actually in the border with Peru. There's a very large land package that Aurania controls, coming to over 2,000 square kilometers. So I don't believe that's a discrepancy. So that's over 200,000 hectares into what the company calls a Lost Cities project. As you can imagine, for this size of a land package, though, there are multiple targets here with multiple geologies or target geologies on them, with potentially the most exciting one, or at least to me, from a selfish perspective here, would be the Awacha target, where evidences of a porphyry system have been found, with the surface layer already showing phyllic alteration, with both geophysics and geochem creating multiple compelling targets, with copper and molybdenum geochemical anomalies coinciding with the mag highs, so with the geophysics essentially. Additional mapping is expected here at this target later this year, so hopefully we'll get some insights on it during this interview. I don't believe much work is happening here, unfortunately, though, but again, Keith and I will talk about that later on. What else there is to expect over the rest of 2024 and well into 2025 is some field work and an IP survey at Kuriyawi, which I'm trying to pronounce that correctly, but this is this target, same project, so southeastern Ecuador, but this target is a supposed epithermal precious metal system, so gold and silver, which is and by the way, there's an infrared spectrometer that showed kaolin and chloride alteration at surface here. It's getting a little technical, but this is important. It's probably on your screen. You might want to pause and better understand what this means. But again, this is just a PIMA, so a PIMI survey. A PIMA survey. So essentially, it's a tool that measures the reflectance spectra off the surface rocks. Okay, it's not diamond core drilling that's provided the alteration composition. Important difference here. So there have been, however, samples taken from some of the outcropping veins as well, though, and they showed thallium that coincided with the illite alteration. And the presence of a Dolaria imprint is also important here. Again, getting a little technical, because besides making me look smarter than I really am, this means that the project might be worth investigating further. It is showing that potential for an epithermal precious metals veins system. So there is also an RTP and a 3D MMT that was completed, as you can probably see on your screen right now. So an IP survey here will come in handy for drill targeting. I hope that's not too expensive, but I'll ask about that later on as well. And again, hopefully more about that whole project later on in the conversation. Other than that, though, what else the company expects to be doing this year is further investigating some of the visible gold flakes that showed up in a prospector's pan earlier this year, although the source of this gold is not yet quite clear. So some more geological work, aka walking the bush, and some sampling is needed and also expected this year as well. So not moving too quickly. I believe some drilling might be happening. Again, more about that later on. In addition to the Ecuador ground, the company used to have some ground in Peru. I believe that's now divested away from. Maybe touch upon that later on. There is France, though. So, well, my actual neighbor to the south here. So the France in Europe, of all places. I'm trying to make it clear that it's France, the actual country, because that's not the first place you think about when you think about mineral exploration, put it mildly. So licenses are applied for. I don't quite understand how the process works or where it is, so I'll definitely be asking more about that later on, Keith. And though, and even back in Ecuador, there are a few more targets, by the way, worth talking about. So it's not only Awacha, Kuriyawi, and the other one with the flakes. But I'm for some reason I'm blanking out on a name, but I'd suggest you read about them in the company's official setter filings as well as the other presentation, because if I throw some more geological catch terms at you, we might all fall asleep. So instead, I'll dive into the actual interview here, Keith. And this is your first time on the CEO Barbecue, so first of all, thank you for taking the time to talk to me today. But also, obligatory first question: who are you, and why do you think you're the right man for the job?
Who the hell am I? Well, I'm the chief cook and bottle washer and kind of the last man standing, so nobody else wanted a bloody job. I own 44% of this company, and you won't find
Oh,
another junior like that. Even Rob McEwen's company, he owns 26%,
hmm.
but I think I've got more skin in the game in the Canadian mining business than anybody else. I think that's almost for certain. Um, I'm a PhD geologist. I've been in the game for 42 years now. I'm not ready to retire yet. I've got too much to do. But I've been active in Ecuador since 1998. And in 2001, privately, I established the company Aurelian Resources. Took that to the market in June of 2003, raised $3 million off the out of the gates, and very fortunately, Eric Sprott took down 1 million of that, and so we had some very good backing. Anyway, we carried on. We found gold later on that year. We did a financing for 12 million. We never had to do another one because we came up with a bonanza type deposit of 14 million ounces called Fruta del Norte
Hmm.
in 2006 in March, and proceeded to drill on that. At one point, we had 11 drills going. That was sold to Kinross for $1.2 billion Canadian. I was the largest shareholder on the takeout, fortunately, being the founder of the company, and that really has financed and jump-started what we're doing today. Only 100 kilometers and in the same belt of rocks in Ecuador. But I must say, you know, we made a lot of money for the shareholders. The share price went all the way from 30 cents up to a high of $43 Canadian. And gosh, there were a lot of shareholders who were made millionaires. I have a very strong following because people are looking at me and thinking and hoping that I'm going to do it again.
Hmm.
And I'm certainly hell bent to do that. And that's why I've been putting my money where my mouth is. And as you said previously, I've been um, not only providing money in the time in the sense of low interest loans to the company, so that we don't have to dilute with the shares. But also recently, I did convert $2 million of the loans that were outstanding
Hmm.
into shares. I'm very happy to do that. So, you know, I'm in there for 44%. I'm about as aligned with the shareholders as anybody's ever going to get. If the shareholders don't make money, I don't make money. So, you know, we have to go out, we have to hit the ground and do the exploration. But this is not rocket science. Myself and my team have done this all once before, in the same terrain, in the same country. I'm actually speaking to you right now from Quito in Ecuador, so I'm here right now. You know, this is um, well, you know, new things come up every day, but we know how to tackle it. We know how to do the exploration, and really, we're the very first people to look at this massive piece of land. It's 500,000 acres, massive piece of land since the conquistadors. And you know, you hinted at the opening there about the lost cities. Now,
Hmm.
where does that come from? Well, the premise for starting this company was actually I was working with a historian in Ecuador way back when I first arrived there in 1998. I met this gentleman, and he had worked for the mines department in Ecuador, and trying to find old mines through the archival writings, through essentially ancient documents that went back to 1550, 1560, and he knew of a number of places. One of them in particular was considered to be the richest place in the Spanish Empire, and that was called Logroño de los Caballeros. After Aurelian was sold, we went on a paper chase all over the world looking for documents related to this. Spent time in the Vatican Library, spent time in the Archive of the Indies in Seville in Spain, and found literally hundreds and hundreds of documents related to this place and another place, Sevilla de Oro, which just by coincidence happened to be 100 kilometers north of Fruta del Norte. So eventually we did track down and find the position of Logroño. Logroño is or was an alluvial gold deposit along the Santiago River, which is just on the southern boundary of our concessions. And the drainages drain down into the Santiago River. So we have a number of gold targets in the area. And I'm pretty convinced that at least some of that gold that was found by the conquistadors came off of our property. So it's all very exciting, but not just gold, but we found porphyry copper, we found lead, zinc, silver in limestones, we found copper, silver. Looks like the sort of thing that Friedland's been chasing in Zambia and in the DRC, sedimentary hosted stuff. Found it for the very first time in Ecuador. It's never been seen before. And so, I talk about this and I say we have a cornucopia of targets. Um, Really, there's nothing like this. I don't think there's anything like this in the whole world.
Hmm.
So I'm very, very excited, very happy to be working on it.
So you typically my follow-up question here, Keith, would be about skin in the game. You just told me you own over 40% of the company, so over 40 million shares. Is that part of it is I assume founder shares, but do you know what your average cost of capital is?
Gosh, I couldn't even work it out, but I've certainly put lots of money in private placements. Pretty much every private placement I've entered into
Hmm.
from the inception of the company. Company's been around for a long time. It predates Ecuador, and yet we're less than 100 million shares, and we kept it pretty nice and tight,
Hmm.
considering how the market has been over the last. We're talking more than 12, 13 years. So we've done pretty darn well, I think.
I do want to talk about that as well when we move on later on. Are there any other incentives though for you that might be competing, if you will, with this one? Like, is there a royalty that you personally hold on a company's project or a service company that's currently delivering services to Aurania or something else like that?
Yeah, yeah. Well, full disclosure, I was the one who put up the money and got the project actually before Aurania. Aurania was working in Switzerland actually on a gold and a uranium project at the time, and I brought the project personally to the company, and I hold a 2% NSR.
Hmm. Okay. That's what I like calling my smell test. So thank you for being honest on that. I know a lot of
Sure.
people would just hide it. Again, the fact that you own 40% does make it easier for me because for me, what's important here is to understand, are there competing interests? I mean, do you think that the 2% NSR is worth more than the 40% you own? And I think in this case, it's a little obvious because it is 40%. But had this been 4%, I might have had more questions. I want to go.
Well, let me
Oh,
put it this way. I had an NSR on Fruta del Norte.
hmm,
And if I hadn't had that, I did sell it. If I hadn't had that, we wouldn't be having this conversation today because some of the
yeah.
money, when I sold that, I dumped it into Aurania.
Hmm.
So this is I'm as I say, I'm 100% aligned with the shareholders,
Hmm.
and I've been putting my money where my mouth is.
Right. I also want to talk about the rest of that outstanding debt that Aurania has toward you, but we'll talk about that later on when we're talking about budgets. Now, I kind of want to go deeper in what you previously said, the company itself, and as you like to say, you started this company way back when you had when your hair and your beard were still black, which again specifically was a couple of years ago. But your stock price has gone through quite a lot of volatility in the meantime. It was as high as $5 and almost 50 cents at one point. So it's been a long wait for some of the company for some of the investors who joined you in your quest to profit from those assets. So why do you think right now is any different? What are you doing now that is different from what you've done over the last, say, almost 15 years?
Well, we haven't been working on this project for 15 years. We've been active on it since
Mm,
2017. However, um, we when we started out with the original premise, it was to find the lost cities. We did locate one of them. I kind of know where the second one is, but it's in a moratorium area and we can't touch it. So nobody owns it right now. But the first one turned out to be an alluvial area. It's owned by another company, another individual. We don't have any interest in that. But I think the market got ahead of itself, and they thought I was going to very, very quickly find another Fruta del Norte. Uh, Hell, it doesn't come easy. It never does in this business, and especially working in an area that is very, very thick jungle. It's pretty daunting, to get in, get the people, get the crew, and then get them into the field and get them doing the sampling. So, we were doing well. We were around $4. We actually hit an intraday high once of $7. That's when Doug Casey was talking about us. And we pulled back. And really, the pullback, I think people realize we're at a stage now where a lot of it is drill intensive. So it's expensive to do. We've been talking with a lot of majors about joint ventures. But also the interest rates came up and the whole market went boof, as you're very much aware. So it has been difficult to raise capital for everybody, and we're no exception. And really, that's what took our share price down. Also, the politics. There was an election for president, and one of the presidential candidates was murdered. And that was a very bad thing for Ecuador. And kind of the bloom came off the rose. Now, as I told you, I'm speaking from Ecuador right now, and I do believe that this is one of the best places on earth to be working. I get a lot of Americans, especially, saying to me, you should be in North America because of the political risk. It's a lot less, but I can tell you right now that every project in North America, if it gets close to being a producer, is going to get a lawsuit against it by environmental groups, by whomever, NIMBYs. It's just there's it never stops. And we know the Resolute deposit, the Pebble deposit, some of the biggest copper deposits in the whole world have been hung up for years and years and years now through litigation. And that's not happening here in Ecuador. There's one project called Curipampa, which has now got all of its permits. It was recently bought by a larger company, Silvercorp, and that will go into production probably in a year and a half time, something like that. And Fruta del Norte itself is just throwing off money. They're debt free. Lundin Gold is debt free, and they found another ore zone. And maybe they're going to have a mine life for the next 20, 30 years. But I can tell you, when I started this way back in 2001, people said that Ecuador was only good for small mines. And if you found anything that looked really good, the government would take it away from you. And that has certainly not happened. It's I've just been meeting with the government today, actually this morning, and they're very, very open for business. And really, that's why I'm here. I grew up. I'm from Canada. I grew up in Toronto. I did my 2 degrees in Canada, but I won't work in Canada anymore. And I haven't worked there since 1993 because I know that every project that you do in Canada, at some point, it's going to hit the wall, and the chances of getting anywhere to close to a production decision. Well, I'm 62 years of age. I'd have to be about 85 before anything could actually happen in Canada. So that's why I'm not there. Yeah.
That would actually be good. I read a recent article from S&P Global that, well, it was about North America as a whole, but the US had the second longest development timeline in the world at 29 years between discovery and production, let alone everything that has to happen before that, especially if you're in BLM land and whatnot. So for you to get to that stage, though, you're going to have to drill it. And again, that hasn't yet happened at Awacha, which is what I want to talk about.
Not yet.
Not yet. Are we going to see that this year, this season, 2024, 2025 season, we see drilling, or do you have to do something else?
I think you will see that potentially in 2025.
Hmm.
I think we're too late in the year now, and I've not talked about any drilling on that target with the shareholders this year. What we're concentrating on are you mentioned a Kuryawi. You had it backwards, but that's okay.
Yes.
And that's a gold system. It's very close to the road. It has good road access. You know, uh, everybody in the industry, of course, is waiting for the industry to turn around. And for whatever reason, venture capital has been sucked away by AI and Chat GPT and God knows what else. And yet, the gold price is at an all-time high today. This doesn't make any sense. And the majors like Newmont and Barrick are throwing off money right now.
Hmm.
It's a fantastic time to be looking for gold and copper and silver and all these other things. But Awacha is a target that's going to have to be supported by helicopter, which means it's going to be expensive. So rather than going and financing at a cheap price right now and blowing out a whole bunch of paper to drill a watcha, I think potentially the lower hanging fruit is Kuryawi, and especially with the gold price the way it is. And I think most of my shareholders are gold bugs. We could get more bang for our buck there.
Hmm.
So actually today I was just sent the IP contract to do the induced polarization survey over those targets, and the plan would be we've already got the line cutters in on the property now. The plan would be to get it done probably in the next month and a half, and I'll probably get the results somewhere around Christmas time,
Hmm.
and then maybe in January we'd be ready to drill right after New Year's.
Okay, that's interesting. I do want to ask a few questions about Kiriawi, and now I'm trying to say it correctly this time. But
No
I,
problem.
I can't help myself when potentially big, again, potential porphyries are being discussed. That's kind of what I like finding, I
Yeah.
suppose, and who doesn't. I often get excited, but those are not, as you mentioned, they're not cheap to explore. Now, yours is, as you said, going to have to be a helicopter support drill program, but especially if they're deeper than previously thought, which is often the case with porphyry. So, have you considered bringing in a JV partner to help you explore a Awacha?
I certainly have,
Hmm.
and we've talked to a number of large companies. I think the thing that's holding people back right now is that the president is in a caretaker position. He's finishing off President Noboa is finishing off the term of President Lasso. There'll be elections next February, and that will be the first. As these things usually do go in Latin America, there's always a first phase and a second phase, and if in the first election somebody gets more than 51%, then
Hmm.
there is no second vote. But potentially this will go through. Well, it looks like the new government, whomever they're going to be, will be installed in May. And so, I guess the people that we've talked to are just kind of sitting and waiting to see what happens.
Hmm. Well, what do you think if that goes as planned? What do you think a JV looks like? Like, are you giving 75% of the asset? Who are you doing it with? And again, we're theorizing here, so speculation, but what do you see?
Well, um, what I've discussed with my board is we would keep maybe 20%, and we would be free carried to the point of production decision. And then we would provide the percentage to build the mine. I am not a mine builder. My idea has always been to get it up to a stage where we've made a discovery. and punch it out.
Hmm.
Uh, and I know you're very familiar with the Lassonde curve that Pierre Lassonde put together many, many years ago. Basically, when you go through the period of building the mine, your share price falls off, and it will continue to fall off until you come to production, and then it will resume its ascent upwards. But now, as you hinted, it takes 29 years in America to get something from discovery to operation. In Ecuador, the Lundin Group, when they bought Fruta del Norte, it took them 3 years to get it up and running. 3 years is great, but it actually, it beats the international numbers by far. And the whole thing is, gosh, I don't think that the shareholders of Aurania rather, will be hanging around until we have a producer. That would not be the idea. So, I don't want to go through the wilderness of 5 years, 8 years, 10 years, where we're waiting for permits and environmental studies and all the rest of it. I would just sooner, have a nice appreciation on the shares and then punch it out.
Hmm. I assume, though, to go back to JV, is that it would be some kind of an earning option agreement where the larger company spends money for the option to then purchase that remaining
Correct.
with 70 or 85 or 80% or whatever.
Yeah, something like that. Yeah.
Yeah. Okay.
I've never sat down at the table and got that far with anyone yet.
Hmm.
But we've had people in the data room, and I'm talking about pretty much every major company in the world, over the last 5 years.
Hmm.
And so certainly everyone in the industry knows who we are. And I think they're all just kind of biding their time and waiting for us to come up with a nice discovery, and then maybe you'll have a feeding frenzy.
Hmm.
It all really depends on what the market is looking like at the time. Um, you know, we all know that copper is going into deficit. Gold price, as I said, is at an all-time high. Um, it's really the best time to be making a discovery. We just need the shareholders, the general public, to catch on with this thing. But I always used to say back in the Aurelian days, exploration can be uh, as lucrative as cocaine smuggling.
Hmm.
Not that I advocate cocaine smuggling, but we turned a pretty much worthless piece of jungle into something worth over $20 billion. Today, it's probably worth over 50 billion. And the share price, as I said, went from 30 cents up to $43.
Hmm.
That's what it's all about. And people forget this, but I've been around this business for a long, long time. I've seen discoveries like Chuck Fipke's discovery in the diamonds in the Northwest Territories, David Lowell, both with Arequipa and with Escondida, and some really, really world-class things where share prices just took off to the moon.
Hmm.
And this is what happens, especially when you're in a frontier area where we are, where we're not taking the leavings from somebody else.
Hmm. Would you say that you have enough data on a watcher to get a major interested as is? And if you don't, what else do you need in terms of data, and how much money is it going to cost you to acquire that data?
Good question. It's not completely, we know that there are multiple targets there. So it's a cluster, um, pretty much like Solaris has with Warintza to the south of our property. It's a cluster of porphyries. Um, and um, I think we need to do a little bit more geological work there. But then we'd be in a position where we have to basically bring the drills in. The cover, the geological cover on this is pretty thin. There's a layer of mudstone on top of the porphyry. But where there are ravines, where streams have cut down through this mudstone, it's cut into the top levels of the porphyry. And this is unusual for this part of Ecuador. Usually, these things have been they've been eroded pretty deeply. In this case, we've got some very high levels of the system preserved. Now, I don't know if it's my favorite target. It depends on what day of the week you ask me. But we have some other stuff as well that is certainly very, very compelling and would be easier to drill. And I'm not just talking about the gold systems, but also on the copper, silver, and sediments, which we really have done very, very little work on.
So timing wise, do you want to do all that work this year, that geological work?
We can't get to all of it this year.
Well, I mean this
And we
season, so
don't have the
2024,
money,
20.
right?
Yeah.
Yeah,
Okay.
so we're going to focus on the gold stuff right now, and do this IP survey. And the idea would be, and we've reserved the money aside for a minimum of 3 holes, and we'll see what we get. Now, this is in an area where we drilled once before. The drilling was not really that. The program wasn't well conceived. It wasn't something that I personally put together. It was somebody else who's no longer with the company. And we drilled some holes, we hit some epithermal veins. Now, the thing that was interesting, and this gets a little bit technical, but we did what's called fluid inclusions on these veins. And we wanted to see the temperatures of and the salinities of which these veins formed. And they're fairly low temperature, meaning they're at the edge of the system, but they're very high salinity. And high salinity means that they're from a magmatic source. What we think has happened is that the gold has been dropped out of the system at a deeper level. And what we see is what we call the volatile elements, things like mercury. Mercury goes into a vapor phase. We have enrichments of mercury, arsenic, antimony, all these other things at the surface right now. Now, I might add, Fruta del Norte had very, very little gold at the surface. And actually, my board at the time weren't too enthralled with drilling it. They wanted to drill a geophysical target just to the east, which turned out to be the propylitic halo of a porphyry, a copper porphyry. At the time, really, copper wasn't of that great interest. So it was considered to be a red herring and a dud. And we turned around and we drilled this geochemical anomaly, which was very high enrichment of mercury on the surface, 78 parts per million, 600 ppm arsenic, and it was off the charts or for antimony, it was off the charts for arsenic. It was more than 5,000, and 5,000, that's the limit that the lab gives you unless you want to pay for an extra analysis. It didn't really matter at that stage. So we drilled that, but as I said, very, very little gold. And we ended up with 200 meters of more than plus 4 grams per ton. And then we were away to the races. So we're considerably, these things are, they're vertically stratified, more or less. So, in a place like Yellowstone, you could sample, and people have sampled on the surface and found high enrichments of things like arsenic and mercury. And probably, if the Forest Service would ever let anyone do it, and you drilled a couple of 100 meters below that, you would hit gold. And in fact, before the national park was established, there were gold prospects all the way around the park, within the park, and in the other fringes of the park as well. So this is the way these systems are. I went down to Patagonia a number of years ago, and I looked at a gold system that had been drilled by three companies, and they hit virtually nothing because they didn't go deep enough. And a company called Andean Gold came in, and they drilled some deep holes on the thing and hit bonanza grade, and then it was taken over by Gold Corp, and I think it's now this is the Cerro Negro mine today. Um, so you have to be persistent with these things, and it's not just a one-shot thing. A lot of these systems, you have to go back and kind of reevaluate it and figure it out. Now, we're doing this IP survey to more rigorously figure out where the conductors are at depth, and target this thing much better.
And then, if I understand it correctly, you want to drill Kuriawi first before you go for another capital raise and do something else with the money.
Probably, yeah, that's what we'll
Okay.
do.
Yeah.
Yeah, yeah.
Well,
But we
so
got a
three
lot of irons
holes.
in the fire.
Sure, it's true, and I want
Yeah,
to talk about that as well. But you
sure.
said you want to drill three holes, if I understood
I think
correctly.
so, yeah.
How many
That's the
meters are you
plan at the
thinking?
moment.
How deep?
Don't know.
Hmm. You're
Wait,
gonna
wait for the IP survey. It would be stupid for me to comment.
right. Fair. You want to have as much data on it as possible. What do you? It, so the process that you're kind of following here, and then ending with the IP survey before the targeting. There's been other companies that have targeted high grade epithermal systems in Ecuador. What are you doing differently, or what do you have that's different than the ones who tried and failed?
Who's tried and failed?
I see it all the time. Companies who talk up a project, and I'm gonna have to think for at least 2 minutes before I can give you exact names, but it's not one or two.
Yeah. Well, you know, I did my PhD on epithermal gold.
Hmm,
I've been around this business for a long, long time, and it's not, the decisions are not just falling on my shoulders. We've got a lot of very good people within the company and consultants who look at this data, and so it's educated opinions.
hmm,
There is no magic bullet in this business. There's no way that you can guarantee that you're going to get a hit. But it's well, you give it your best shot, and we don't just have one potential epithermal um, target. We've got two parallel belts that are both 30 kilometers long.
hmm.
This is a huge number of things to chase, and we can't do it. We're only a little company. But I would love to luck into something here, and then bring in a partner, say Newmont or Barrick or one of the big gold companies, and then do a proper assessment of the entire belts.
Hmm. That would also have been one of my follow-up questions. I'm thinking though to something you just said. Is the internal thesis that this is a single feeder system, or do you think that there's sort of multiple or parallel um, vein systems that are kind of nested next to each other?
Oh, actually, if you were to plot it up and on a plan view map and compare it with the geothermal area in Yellowstone, it's the same size. So we're talking about something that is very, very big.
Okay, so multiple.
Yeah, and you won't remember because you're not old enough, but there were a number of very big discoveries around Yellowstone Park, one of which was shut down and never permitted because it was called the New World Discovery, and it was never permitted because people raised issues about seismicity.
Hmm, hmm.
Um,
I think I've heard
well,
about that.
yeah.
I think it might have been a sparkle in my father's eyes at the time, but maybe not even that. But I
I
have
think so
heard.
too.
What about the nature of the host rock at surface? Have they been oxidized? Can that tell you something about how deep the system might go?
Um, it depends on where you are on the property. Some of it's been
Hmm.
oxidized, some of it, we're in the tropics. We have very, very high rainfall. So it's a pretty high rate of erosion. It's just variable. It's quite variable through the property. I mean, the whole thing is 90 kilometers from end to end. It's huge, and it's not exactly mountainous, but it changes from about 800 meters above sea level to a high of 2,600 meters. That's not high enough where you have to have oxygen or anything like that, but it's certainly high enough that there's no malaria and no dengue fever, which is a
Hmm.
wonderful thing. Um, yeah, so it's quite variable terrain. All of it's covered in thick jungle.
Okay. But you said it's 90 kilometers. You're not doing an IP on the whole package,
Oh
I
no,
don't
no, no,
assume.
no. Nobody
How
could.
how big is the surface going to be that you're going to cover with the IP?
Oh gosh, I can't tell you offhand. I
Well,
can't. Yeah, yeah,
let me tell
but
you where I'm going with this. I mean, the
yeah,
size is less important here. I'm just wondering where it
yeah,
is, and specifically if the geochem that you've done on that part of the package is also showing
sure.
you any Pathfinder elements.
Oh God, yes. Yeah,
Hmm.
yeah. In fact, there's so much thallium. Thallium is back in the good old days, and I'm talking about 1880s, 1890s. Uh, they have that old play, arsenic and old lace, but actually thallium was considered to be the poison of choice back then. And some of the rock samples are so rich in thallium that they would be pretty much lethal they're actually lethal to things like earthworms.
Hmm.
So invertebrates and things can't live in the ground uh, just because, and this is all natural. There haven't been any illegal miners, nothing like that in the area, nobody dumping mercury in the area or anything like that.
Hmm.
This is totally natural coming out of basically an extinct hot spring area.
Hmm.
But that's thallium is considered pathfinder. We've got very high selenium in places, another pathfinder, and then arsenic, antimony, mercury. These are all things that accompany epithermal gold all over the world.
Hmm. Pyrite, sphalerite, galena, something else.
Pyrite, sphalerite and galena, if you get in a lot of that, you're usually in what we call the base metal zone, and it's in the lower parts of the system. And in fact, at Fruta del Norte, you cross over a fault, and on the southern side of Fruta del Norte, at the surface, there's very low gold and very high lead zinc.
Hmm.
And that's because that's a fault block that was moved up and then eroded back down, and the gold system that was on top of it is gone. It's eroded away. And in fact, that's what we started our work on that, not knowing that only a kilometer away over the top of the hill was exposed the gold system. It took us, unfortunately, a couple more years to get over there and find it. But yeah, having a lot of lead zinc is not exactly a great thing in an epithermal situation.
Right. Well, that's why I'm asking.
Uh-huh.
But that's fine. Are you right? Okay, so yeah, I asked you that already. Are you going to be looking for a JV partner here too after you drill those 3 holes, or is that something you want to keep to yourself?
All depends on what it looks like. And,
Hmm.
if it's another Fruta del Norte, of course, we'll continue to pursue it. I'll go to the market and raise some money, but it certainly would be at a higher price than where we are today. And, give it my best shot. You don't just, I mean, if we'd gone ahead and sold Aurelian after we made the initial discovery in the first couple of months, it was around $6 a share, and as I said, it went as high as $43. We wouldn't have got a lot of money for it.
Hmm.
So, uh, it's kind of it's a balance, right? You don't want to spend too long on it, and you don't have to drill it out to the nth degree and keep diluting your treasury, or spending your treasury and diluting your shareholders and all the rest of it. At some point, if there's an offer that comes in, maybe it's best to take it.
Hmm. Would you, based on the results of the upcoming field program, consider cutting down the size of the land package, though, given the well, I think there's a cost related to holding it, right? So would you consider cutting it down or optioning out parts of it and just focusing on Kuriawi or Awacha, just keeping those two and moving forward with them, or do you want to keep the whole package?
Well, I'd love to keep the whole package, and that's one of the things that I've been discussing with the government today. We'll see what's possible. And we've just got so many targets. It's, as a geologist, as a career geologist, it's very, very difficult for me to walk away from anything. And I know that the next person who's going to get a hold of it is potentially going to make one or two world-class discoveries. And I want that to be us. And we'll I'm trying to make it happen, and I think I am making it happen.
I'll make a point because I have it on my list here to ask you about the government.
Yeah,
So I'll make a point on that later on. But this might also be a good
sure,
point to talk about corporate strategy as a whole. And I'm not contesting it. I'm really just trying to understand it.
sure.
Trying to understand why not just focus on one or two main targets in Ecuador and drill those before doing additional work on the other targets and in the other countries, including as well. So talk to me about that.
Well, if you concentrate on two targets and they end up dead, duds, then you're dead. The
Hmm.
project's dead in Ecuador. I won't be able to raise any more money.
Hmm.
So it's best to spread the risk. I've always been in favor of large land packages. Aurelian had 95,000 hectares, and we found one world-class deposit in that very, very large package. Now, we had many, many targets. We had copper porphyry targets, but as I said, copper porphyry was not the flavor of the month back then. Uh, we had multiple gold targets. We drilled upwards of 200 holes on lots and lots of different targets. And if you are a company with a postage stamp land position somewhere, the chances of you finding something, uh, never mind it you know, being world class, but even commercially viable, is pretty damn low.
Hmm.
You have to, you have to kiss a lot of frogs before you find the princess. And we've got multiple targets here. Um, what I need to do is attack the best looking ones first, and then we move down the list. Fruta del Norte was not the top. As I said, we had this IP target to the east, which turned out to be the halo of a porphyry copper. And Fruta del Norte was considerably down the list. We drilled a lot of other targets. We had one area, 9 meters of 51 grams per ton. But when you drilled underneath it, there was a flatline fault and we couldn't pick it up. It was gone. And this is what happens in geology, right? So you have to be persistent and for the first number of years working on our project, because there was no known database, it was just a case of collecting stream sediments. We did airborne geophysics over the whole package, but it took a long time for the targets to start to pop out.
Hmm.
And it's unfortunately there are some shareholders that think they're into instant gratification, and it just doesn't come that way in this business.
I suppose we're all into instant gratification, but it just never happens that way.
No.
But it's also a balance, though, I suppose, right? It's kind of like in investing and managing my own portfolio. I also want to have diversification, but I don't want to have too many eggs, right, in too many baskets. So
Yeah.
how do you keep that balance between stretching yourself too thin as a junior and still keeping that diversification?
Well, we haven't been spending a lot of money over the last couple of years.
Hmm.
Um, we should probably just talk about this now, but when the elections came up in Ecuador, and it looked very, very likely that a socialist government would be returned, uh, we did a little bit of a pivot. Now, I knew of a couple of things in Brittany, in northern France. It was something that kind of like fell out of the sky and kissed me on the forehead. And it's not something that you just go ahead and ignore. I saw samples that came not off the outcrop because there's no outcrop visible, but pieces of rock that came out of the soil profile in the subsurface that ran as high as 46% gold. 46%. And that is super, super bonanza grade.
Hmm.
And so we decided to file on this. Now we haven't talked about it too much because we don't have the concessions yet. It's still in progress. Um, there's been a lot of chatter within France about what we're doing uh, because our various projects there went out for public comment. And I ended up on the 7 o'clock news in Paris, not interviewed, but featured. And maybe this is the reason why the share price is off the deck from circa 20 cents up to has been recently to a high of 70 cents, as you mentioned. And it may be anticipation from that. I don't think it's coming from interest in Ecuador, but maybe it is. Maybe it
Hmm.
is. We've been working in Ecuador for a long, long time, and the shareholders, we've got some shareholders who have been very, very patient with us, but it's just taken a long, long time.
Hmm.
And maybe they're a little bit jaded about Ecuador. I am not. I'm still a 100% believer. But there's other things in the world that are potentially lower hanging fruit. And when we saw this opportunity, it was just too good to ignore.
Hmm. Well, does that mean that France is going to be your new focus? I mean, because that's kind of what I'm getting out of this, but is it?
No idea.
Hmm.
We haven't even walked on the land yet.
So you're going to know what later this year, early next year?
Don't know.
Okay.
It's not a process like in Canada or the US where you just stake it and you get it the next day. It
Okay.
takes a long time.
Hmm. So
Yeah.
you're not guiding anything in terms of timeline as to when you can get those permits.
Not at all. If I said anything, I'd probably be wrong.
Okay. Is it
The
costing you?
ministry says it's usually around 2 years to get your concessions. Uh, um, we're certainly past 18 months.
Hmm.
Um, and but it's bureaucracy. And certainly when Macron called the election, um, that was not anticipated. And suddenly all the bureaucrats are electioneering and everything shuts down.
Hmm.
So it's kind of starting to pick up again, but slowly, 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 slowly.
What about? Okay, I get that. Is it costing you a lot of money though to go through that process? How much money are you spending, or have you spent on that whole
Nothing,
process? Hmm.
nothing. No
Just working
patent
hours.
fees in France. There's no fees to the
Okay.
government. Yeah.
Okay. What about? Let's go back to Ecuador though, and talk to me about the political situation in Ecuador. That's what everyone always brings up, right? Because of what's just happened. So how do you see it now, and where do you see it going?
Well, President Noboa, the current president, he came in December of last year,
Hmm.
and first thing he did, he had to be very tough on crime. Ecuador has been in the headlines, unfortunately, over the last year or so of prison riots and things like that. He came down very heavy on this, threw 15,000 people in jail. Um, our new jail is being built right now in Ecuador, and the reason being under the last president, the Colombian drug lords and the Mexican cartels got into the country, and they've been using Ecuador as a conduit between Peru and Colombia to ship drugs. And that's very, very unfortunate.
Hmm.
However, this president and this regime is being tough on crime. Not exactly as tough as, say, in El Salvador, but certainly made great strides and continue to make great strides and to shut this kind of stuff down. Um, the the president is popular, and what I'm told by the people who live here are the chances are very good that he's going to win the election next February, and then he would have another 4-year term.
Hmm. Where does that leave you in terms of getting permits? Can you do all the work that you now want to do without having to go and talk to the government again?
Sure. Well, under former governments, especially under the socialist, it was very, very difficult and took a lot of time to get um, land use permits, to get permits to drill, especially from the environmental ministry. They were completely underfunded, undermanned. Things were just dragging on forever, 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 and that's been turned around. So, as I said, this one project, Curipampa, is now got its essentially its mining license, and they're going to go into the build phase now. I don't know if that would have been possible under the last president. But the government in Ecuador, you have to understand a couple of other things. First, in terms of the economy of Ecuador, Ecuador has relied on oil since oil first started to be produced here in 1969. They're a member of OPEC. They derive most of their income from the oil business, but the fields are declining.
Hmm.
The revenue is declining very much. Number two on the list is bananas, and number three is cut flowers.
Hmm.
And mining is way down the list. That being said, Fruta del Norte is 1% of the GDP of the country. That's with one mine, with one mine. And there is potential here to certainly have 20 mines. And this is a small country, right? It's about the size of Uruguay, and but it has an incredible endowment of minerals. And the government knows that that is the future of the country. And this country could be a major producer of copper. And there's certainly uh, no reason why Fruta del Norte could be duplicated a half a dozen times elsewhere in the country. And and the government knows this, and they know that this is essentially where the money is going to come from in future.
Hmm.
So this government has been very responsive to the mining business, where previous governments have not been. And oil has always been a priority. So right now, there is the vice minister of its mines, energy, and petroleum is in charge of mining. But I can tell you it's in the cards right now to break the mining part side of it away and have its own ministry here in Ecuador, which will be a great thing. And then there'll be even more focus on the business.
Hmm. So it sounds like Ecuador just has to find 99 more Fruta del Nortes and they can double their GDP. Um,
Exactly.
how is your relationship with the local communities though, and how does licensing with them work in Ecuador? I assume it's multiple local communities that you're dealing with because the size of the land package, but talk to me about that.
Well, it's not like Canada, where every project has certainly, or in Australia, where everything's got a sacred site on it, or in Canada, you've got a claim against it because it's traditional lands or something like that. That does not happen in Ecuador. So we have a number of villages. They're the indigenous group. They're called the Shuar. And I have a very, very good relationship with them. In fact, later on today, I'm going off to the project area. And tomorrow, with the governor of Morona Santiago, which is the province in which we're working, I'm opening up a school.
Hmm.
And that school has been financed a little bit by the company, but mostly by a charity which I run. It's called the Step Forward Charity. It's a registered Ecuadorian charity. I put most of the money in, and this is a way of giving back. And it's specifically designed, and the intention is to provide development opportunities and health opportunities, education opportunities for the Shuar people. And it's a little bit, uh, I suppose, well, the London group they do a similar sort of thing. They have projects all over the world, and they concentrate their charitable efforts in the areas where they have projects. So I suppose it's not completely at arm's length from the projects, uh, but certainly the need is there. Um, we have a situation where there's very low level of literacy. 86% of the indigenous population have intestinal parasites. And how is that even possible in 2024?
Hmm.
But this is the case, and this is one of the things that we're strategically working on to fix. Uh, we've brought clean water to 10 villages. Um, and, I think we do more for the community, certainly more than anybody else, any other company in Ecuador. But really, I don't think you could match our, um, what we've done in Ecuador with really any other jurisdiction. And one of my favorite things to do is every December, I dress up as Papa Noel and I visit all the villages. And that's an opportunity for me to give a speech to the local people in my bad Spanish and engage with the communities. And I don't see any other CEOs from Australia or from Canada doing this kind of thing. So we have an excellent, excellent relationship with uh, the indigenous people living on our project.
Well, you have the beard to fit it. Maybe you should consider gaining a couple of pounds too, though, because I think Papa Noel is a little bit larger than what I'm seeing there on your face. But
Oh no, well, I'm not going to pan down, but take my word for it. I fit out the Santa suit pretty well.
I'll take your word for it. Maybe I'll meet you in a couple of months at a conference or something. If you're going to PDAC, we'll do an interview on site. But you have to dress up as Santa, otherwise I'm not going to talk to you.
Sure.
Uh, Your Keith, your presentation also says that there are other opportunities that you'd like to explore in the meantime. I think it used to say that you'd go for M&A on your last presentation. Watched the recap that you did like 3 or 4 months ago. But
Yeah.
now it also says base metals. That's not completely clear to me as to what that means. What does it all mean? What other opportunities are we talking about here?
Uh-huh. Well, base metals, of course, is copper. And as I said, we've got copper, silver, and sediments on
Hmm.
the property. We've got porphyry copper as well. Um, we're we're looking at some other stuff as well, and it's not something I could comment on. But some opportunity that is very compelling, and
Okay.
there should be news soon.
Okay. That's a little cryptic, but I hope there's going to be news soon.
That's all I can say.
Fair enough. Before I let you go here, let's talk about budget. As I mentioned, you have about $3 million in cash. How are you going to be spending that? I mentioned you did about $160,000 per month on G&A over the last 6 months, and that's on average. Is
Yeah.
that where you want to keep the G&A? Talk to me about where all that money goes.
Well, the GNA is what it is, right? It's kind of a set cost. We have to pay our people.
Yeah.
The expiration we've set aside 2 million for that. Now I have a number of warrants uh, that are 75-cent warrants expiring in November and in December. Uh, I would really like to get some positive news out to get our share price well above those strike prices and get some more money in uh, without having to go and canvass young or canvass Bay Street and beat the bushes for more money.
Hmm.
So that's what a real focus of mine is on the next 2 months. And that's you will see some news.
Okay. So are you there is an overall warrant overhang, like there's a serious warrant overhang, what I say, like 36 million warrants or something along those lines. Is there an option for you to call those in earlier? And is that something you'd consider doing if the share price allows it?
Some of those warrants are way out of the money. They're like $2.20.
Hmm.
And we're sitting around 60 cents right now, so it'd be a bit of a stretch. Um, Hopefully we're going to get back up there, but we'll see. Um, I there are of course different rules, and it depends on what it is, on whether or not I can extend warrants. Um, these ones that we're going to do that are coming due in November and December, because our share price is not too far away from the warrant price. Um, we just I'm going to do my best to get that share price up and get the money in.
Hmm. You, as I mentioned at the beginning, Aurania also holds a significant amount of outstanding debt in the form of those promissory notes to
Mhm.
yourself personally. How do you expect that to be handled? Are you going to be taking in more shares for that debt, or is the company going to have to repay it back?
Well, I don't really worry about this. I own 44% of the company. I don't need the cash. So it's not like I'm going to be calling the debt and sending the company into bankruptcy or anything like this. It's in my best interest. I mean, the reason I lent the money to the company in the first place is from time to time, you if you're running an exploration company, you can't just shut everything down for 6 months, for 8 months, and wait for better times
Hmm.
in some times, coming out of the COVID, it's just absolutely impossible to raise any money. So where's the money going to come from, right? It's been coming from Keith Barron. And I'm not a charity. I do expect to get the money back. Um, and but I don't want to damage the brand, so to speak. I don't want to 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 do anything that's going
Sure.
to overall hurt the company.
Yeah. Yeah, no, I understand. And it's also not on the current liability side of the balance sheet, so I'm less worried about that. You do on the on the current side of on the current liability side of the balance sheet. That's a mouthful, but you do have about $3 million worth of outstanding account payables. What is that, and how are you gonna take care of it?
Most of it is money payable in patentes to the Ecuadorian government, which at this point have been deferred.
Okay. Okay, so you're not gonna have to pay them within 12 months. That's fine. I think I've tried being as annoying as possible to you with all my questioning here. What are other annoying or tough questions that people are asking you that I'm forgetting to ask here?
God, tough questions. Well, of course, the first question is when are you going to make me rich? So,
That'd be nice.
that's maybe the hardest question. I don't know. I think the shareholders that we have are very, very happy to see that I have so much skin in the game and that I'm engaged and that I'm working on this pretty much 24/7. And this is my baby. I want to see it see something come out of it. I can't tell you right now if it's going to be a big copper discovery or another gold discovery or what it will be, but I feel in my gut that it's going to be something here. And I just together with our people have to make it happen. Part of exploration has got three different very important parts to it.
Hmm.
The first is to be in the right piece of real estate. The second part is to be financed properly so that you can go and do the work. And the third part is potentially the most important, to have an experienced technical team who have good powers of observation, who have a lot of experience and they know what they're doing and can go out in the field. Because I can tell you right now, there's a hell of a lot of companies out there that don't.
Hmm.
And some of these are lifestyle companies, and they hire consultants off the shelf, and they just kind of go through the motions. We're not doing that here. We are absolutely committed to make a discovery.
Hmm. Well, saying some is putting it mildly. You could have said most. But thank you so much, Keith, for doing this. It's been a pleasure talking to you. Hopefully, we'll get to speak soon again when you have some more news. But thank you so much for sitting down with me.
Oh, it's been a lot of fun. Thank you so much. And you haven't been that annoying. You could have been much more.
I'll try better next time.
Okay, take care. Thank you.